What is going on, everyone? Welcome to the channel. Today, we're going to be talking about the crash being near. I have a special guest right here, D-Will, which we're going to be going over technical analysis. Someone I respect in the space, really good at technical analysis, way better than me. So a lot of people are always asking me, John, what is the best way to go ahead and get started? How can I go ahead and start leverage trading? So D-Will being here is going to definitely teach us not only how to read charts, but is definitely going to go ahead and give us some insiders. So very excited to have him here today. Smash that like button for me if you are officially live. Comment down below as well. And as always, just know none of this is financial advice, solely our opinion. So now I'm going to go ahead and pass it over to D-Will. But before I go ahead and do that, I want to go ahead and say good morning, Goldie. Hope you're having a good one today. Hope everybody's having a wonderful day. So in the meantime, I'm not sure if you want to go ahead and get some charts going on, D-Will. I'm actually going to be sharing the community, the live stream and everything. So you could either go ahead and pivot to your screen if you want to show something, or in the meantime, you could just go ahead and wait while we're pushing everything. We have 4 viewers so far. So I'm going to go ahead and start sharing this to the community in order for us to go ahead and get started. So yeah, we are officially live. Looking good. Happy. How's it going? Thank you. Good morning. Good afternoon. So I'm going to go ahead and switch screens right now. We could go ahead and put your charts. I'm going to go ahead and change everything real quick. Put our thumbnail and everything. But feel free if you want to go ahead and say anything, D-Will. Do your intro while I start pushing our live stream to the communities.
Okay, cool, man. Welcome and thanks for having me, John. I really appreciate it. And yeah, I've been a little bit about myself. I've been trading since 2017. And that's basically where I placed my first Bitcoin, or bought my first Bitcoins and Ethereums. Since then, I rode out the previous 2020 bull market where we all make lots and boatloads of cash. And then I lost most of it during hacks and my Phantom wallet being hacked. And that's where I started taking things a little bit more seriously, to say that, well, I need to find a way to get my money back out of the market. And I learned how to trade properly during the bear market. And I knew that if I could master trading during the bear market, I would do exceptionally well during the next bull market. So yeah, I've resigned as CEO of my previous business, and then I took on trading full time since I started turning profitable. And when I say profitable, you need to make consistent money month by month so that you can pull a salary trading any market cycle, whether we're going sideways, whether we're on a bull cycle or on a bear cycle. You want to be a consistent trader. And then when I reached the consistency, that's when I resigned and started trading full time. And then here I am today. You know, I'd love to share my knowledge with the world, and that's why I also started the YouTube channel. That's why I'm here talking to John today, is that trading gets lonely, very lonely. You sit, you stare at a screen every single day, and you have no one to talk to. You have no colleagues. You don't go to a coffee shop or spend time with people outside while they have a cigarette. It's a very lonely world. And I think YouTube is one of those ways where you get to express yourself, where you get to connect with people around you. So, and also I just wanted to share my knowledge and share my trading journey and help other people be successful. And I think the number one lesson for me during this whole journey is it's not how good your technical analysis is. It is how good your risk management is that keeps you in the game. So yeah, that's basically an intro from my side, John.
And I think you killed it on that. So right now I'm just sharing it to the last community real quick. We are now live. Yeah, so I think, you know, I'm very excited to have you here today because there's always people on my live stream always asking me, like, you know, tips on how to go ahead and get started. What's the best way to start? You know how we were talking, you know, before we went ahead and actually went live, I was talking to you personally how when I started actually, you know, trading, I started back in the stock market and then slowly did that intro just recently into leverage trading. And I've been learning a lot about leverage trading these last couple months, but there's definitely a huge learning curve, right? But I always, at least for me personally, I always tell a lot of people, see, you're saying risk management. I agree with it. I also like to go ahead and always add, I would say being disciplined is one of the biggest things. Because I remember when I was very successful when it came to some trades was because I had the discipline of either taking profits and not over trading. And I think it's really easy to go ahead and lose your account very, very easily if you're not disciplined enough to do that, right? Like be disciplined enough to say, you know what, I'm not trading for the today, or I'm going to go ahead and take a break, because I agree with you. Trading does get very, very lonely. And at least for me as well, too, I was trading, like I was trying to figure out in the beginning, what were the best trading sessions for me. I was trading all day trying to figure out what works for me. Now, like if you were to ask me, hey, John, what's your favorite time to trade? I could tell you. But I think that's also one of the things when it comes to personally as a trader, is that everybody's setups are going to be different. Everybody's going to be trading in a different time frame. Everybody's ability to trade is going to be a lot different. So it's not like a one size fits all, which I think it's pretty cool, right? Wouldn't you say it's pretty cool about that you have really nobody else to blame but yourself?
Yes, you're the one that pulls the trigger at the end of the day,
100%. Yeah, 100%. So we could go ahead and get started. We are officially live on everything. So I already went ahead and shared it with the community. You could also go ahead and see the chat onto the right side. I'm not sure if you see that on your end, but I'll let you know when we do have any comments. We could go ahead and get started, man. What are we going to be starting off with? Are we going to be starting off with Bitcoin?
Yeah, perhaps let's start off with Bitcoin. It's the king, everything follows the master. So let's analyze it quickly, perhaps from my side. What am I seeing today? And then we can jump into some altcoins, if that makes sense. Okay. Cool. So the first thing I want to share with everyone is to say that looking here at the daily. So first question is, Diavolt, why is your chart green and purple? And I always get that answer, is to say that from a psychology perspective, we as humans are programmed from very small that red means danger. Okay, red means stop. At a traffic light, red means stop. Warning signs, red. So from a psychology perspective, when the market dumps, it creates fear, and it creates that undertone and that psychology inside of you to say that it's dangerous. It shouldn't be doing that. So I changed it to purple because for me, a chart is an opportunity, whether it's going up or down. I actually do not care whether a Bitcoin goes to $1 million or whether it goes to $10,000. As long as it's going in a direction, I can make money. So for me, it's green as an opportunity and purple is my favorite color. And it's also an opportunity when I see purple. So purely from a psychology perspective, I removed the red from my screen. Okay. So
and I'm actually glad I'm glad you mentioned that, man, because I was actually going to ask you, like, can you tell us a bit about the color? Because I was actually talking about with my live stream probably a few live streams ago, maybe over a week, and we were talking about how I heard that some very good traders also just keep it as simple as black and white, and I've heard that that's due to the fact of the psychology that way, so they won't get too emotional. So that's actually really great the way you started with that. So I'm assuming the purple is supposed to be the red, right?
Yes. So green is still
Awesome.
green, so that it has the familiarity. It's just my red I've made purple, my favorite color. So I would suggest, if you want to get into the habit of it, keep the green because it's a good color. It's a psychological color that means peace and love and all these beautiful things. And then slap on your favorite color as the red color. Change that to your favorite color, as long as it's not red.
I'm gonna do that now, man. I'm gonna do that. I'm gonna definitely have to change it up. I'm liking the purple. It doesn't look as scary when I look at it. It makes it look a lot better.
Okay, cool. So I'm here on the daily time frame. Let's just analyze the price of Bitcoin here. You'll see that I have a monthly point of control and a 0.618. And when you zoom into this little price structure over here, you'll see that we tapped it to the dollar. I mean, how beautiful is technical analysis? To the cent, not even the dollar, to the cent, we tapped this level and got a beautiful rejection to the downside. So I just want to show everyone, where do I get that level from? So when you zoom out a little bit, and I'll even go on to perhaps the 2-day chart, just to give myself more real estate. So when you look at this entire structure, from the previous bull cycle, you'll see that obviously we have a value area range from the entire bull cycle, where we are now at the top, currently struggling to get through. So massive resistance over here, but also when you take a fib from the top of the bull market, and I'll use my magnet just to make sure that I snap it on perfectly to the bottom, we have the 618. Okay, 0.618. And then also, okay, that's one level of confluence. So as a trader, I have tick boxes. The more boxes I can tick before I enter a trade, the more capital I deploy and the more risk I can apply. The less tick boxes I have from a confluence perspective, the less capital and the less leverage I enter into a trade. So yeah, I've got already one tick. It's 0.618 is an extremely strong confluence level, or a Fibonacci level considered in the trading world. The other thing that I then do is to say that when you go onto the monthly chart, and just some education over here, I go into the 1 month chart over here, and I zoom into these little candles to the left. Okay. You can get a point of control inside of each candle that had the highest. So for this entire month, where was the point inside of this candle where the highest volume was traded? And usually when price gets to that level, it faces resistance or it has support, depending on whether you're moving up or down. So when you take a fixed, let me just give you the right fixed range volume profile, and I want to work out what is the monthly level for this candle over here, for example, from the bottom to the top, and you'll see it creates a little line over there. So during the whole of April 2022, most of the volume was traded inside this line over here. Okay, but we've already surpassed this level. So I go into the next candle. Let's maybe look at this one. From the bottom to the top, and you'll see where I have the monthly point of control is exactly at that red line over there. So now I have two levels of confluence. I have the 0.618 from a Fibonacci perspective, and I have a monthly point of control, which is now acting as resistance, where we tapped this level to perfection for a rejection. Okay. So from a macro
if you don't mind
perspective,
me, if you don't mind me interrupting, can you tell the chat a little bit what is point of control? Because I'm not too sure what that is myself.
So a point of control is when you look at this big range that we formed over here, okay, from 1st of Jan 2021 to 1 May 2022, this bull cycle that we were in before we had the massive drop to the downside. A point of control means during this entire range that you've selected, where was the most volume traded, the most price action? Okay. So in terms of, during this stage, where did people exit and buy and sell the most volume? So perhaps the easiest way to explain it is if $1 million was trading, and I know it's a small amount, I'm just using an example. If $1 million was traded during this cycle, 60% of that $1 million was traded at this level. Okay, you'll see the spike. These little spikes over here is the volume that was traded during these ranges. So there's a volume spike. There's the highest spike. So the highest spike during the fixed range profile that you are pulling is where the most volume was traded, and that you call a point of control.
Nice.
Point of controls gets used very often by myself from a trading perspective, because they act as really good support and resistance.
Yeah, I do see that. That's pretty cool, because you could even see when the action from everybody buying in pumped, and then as soon as we lost that area of support, it kind of dumped. It's pretty cool.
Yeah, cool. So yeah, just to show everyone, this is where I get the point of so you get monthly point of controls, you get weekly point of controls, you get, and we can go into the details now, but nice little education. And I like to keep things simple, but sometimes people tell me it's not simple. But I tell you now, the more you do it and the more often you do it, it becomes like breathing. It's extremely simple. My trading strategies, although I go into Elliott wave theories at times, is because I love Elliott waves. I love what it represents. It's basically, Elliott waves is a way to track human emotion. Okay, but we can get into that just now.
Interesting.
So it is very technical. It is very technical and it's very difficult to learn. But my trading strategy in terms of placing trades is super simple. You guys will see. You can make trading as difficult or as easy as you want. So, okay, cool.
So I want to
So
ask a question. I want to ask a question before we move on. So do you typically
yeah,
use this the what is it called? The tool, is it called the PLC? What is the tool called? That volume, is it volume
the
indicator? What is it?
fixed range
Okay, so
volume profile.
fixed range volume profile. Do you use that mostly like on the higher time frames, like the monthly and the weeklies, or can you use those also like on the dailies and like, let's say for example the 30-minute chart?
Yeah, I will use it on smaller time frames as well. For example,
Oh,
when I
okay.
go into the when I go, for example, into the 15-minute over here, so as soon as I see a consolidation area within a range, you can then say, okay, well, I want to know, take my fixed range profile. Okay, so we have lows here, we have highs over here. So I will say this is a range, pull it, and then it will say, okay, most volume was traded over here. You have a value area low. So this is trade the range strategy. This is a beautiful trade the range strategy. All you need is this one tool to trade the range. You short the top, you long the bottom.
Nice.
Okay,
Nice.
that's basically it. And how that basically in simple nutshell works is that you don't go and enter and put limit orders here waiting for price to come here and then this happens, okay, and it liquidates your account. You wait for price to spike out and get acceptance back below the level, so you are trading the retracement. So if we had to come back up here and we do this and then this back below the level, that's where you enter with your stop loss. As soon as you move into the green, you then take your stop loss, you move it to break even, and you wait for the bottom of the value area low to take profit. Simple.
Nice.
Simple strategy.
Hey, you make it look simple, man. Really cool. I like just learned something. See, I've always wanted to learn how to use that, man. I always saw Andy use it, but I'm like, I got to learn how to use that. Really cool, man. Appreciate it.
Yeah, so I think in terms of where we are right now, the only indicator that I use a lot of tools, but I only use one indicator. And I mean, if I show you here, here's the RSI, which I've got it on here, but I've never used it, or I don't ever use it. When I started out trading, I used to have all the indicators and, you know, the MACDs and the moving averages. My chart used to look like a spaghetti mess. And the only indicator I use now is, and I'll go through that trade now that I've shown you here, is the CVD. Okay. Unfortunately, this is an indicator that you have to use separate from TradingView, because TradingView's CVD indicators suck. It's not accurate. Okay. I've used them, they don't work. So it's a site called AGGR. You can go, it's free. You can click on it and it gives you the CVD for Bitcoin. Okay. I like to trade Bitcoin.
Charts.aggr.
Yeah, aggr.trade.
Okay, I'm gonna post that into the live stream so everybody could go ahead and get it. But can you tell us on how you use that indicator a little bit more? That sounds interesting. The CVV.
So very simple how it works, and it becomes tricky. But the more you use it, you know, it's like riding a bike or starting to learn to play the guitar. The more you do it, the easier it becomes. But the basics of it is, and I've got a little drawing tool, which you have to go and download separately if you want to draw lines and stuff like that, is that when you make higher highs, okay, higher highs, and you make lower highs on CVD, so the yellow line is Bybit, and the blue line I've got over here is all exchanges combined. Okay, ideally you want to see them do the same thing. But when you see something like this, lower low on CVD, on yellow, and lower low on blue, that means it's bullish. So what's happening over here is that shorts are being aggressively absorbed by long limit orders, by bigger players. Okay, it's been absorbed. So when you see price move up, and you see, basically that's the basics. When price is moving up and CVD is moving down, you're going to get a reaction to the upside, and the target is always the high between the two pivots. That pivot and that pivot, this pivot and that pivot, your target is always the highs. So I actually played this trade yesterday in front of my community to say that I think we were over here, where I entered the trade, and I said, I'm targeting this high over here. And then what happened? Boom, claimed the high, took profit out the trade. Okay, so, And then from a bearish perspective is when you see, let me see if I can see bearish CVD over here. Okay, so
let me ask you a question. So when it comes to entering a trade, do you wait for confirmation first, or do you just enter the trade knowing where it's going to go with a tighter stop loss?
Yeah, so let me show you an example of exactly how I entered this trade and which gave me the confidence to enter this trade. So looking at Bitcoin, let's look at the price action that happened over there, exactly in line or in sync with CVD. So it was this price action, this low and this low, okay? I can then say, okay, cool, where's my daily levels? I think I deleted that daily level already, but when I go onto the dailies, let me just put my daily level back. Okay, I had, and this is something else that you guys can learn, is how do you make daily, weekly, monthly levels, because they act as resistance and supports. So I go into the daily and I switch on my daily levels. Okay, there I've got a new fresh daily level. So a daily level is a open and close at the same level that hasn't been tapped yet. Okay, fresh daily level. So this one you could argue has been tapped. Okay, well, let me just undo this. So I like to clone it so it keeps it in my folder. So there was a daily level, but it's been tapped. So it's no longer valid. You only use daily levels that hasn't been tapped yet. But for the purposes of the trade that I want to show you where I entered it yesterday is to say that, well, when I had a daily level over here. Open and, okay. Let me clone this. I like to switch on my magnet because then it snaps it on exactly where it needs to be, because when you zoom in and out of your charts, it sometimes moves the level around, or you click on it by mistake and then it's at the wrong level and you wonder why you missed the trade. So switch on your magnet, snap your levels on. And then when I go back onto the 1 hour, okay, you will see that I have a yearly level over here. Same thing, you're going to the 12 month and open and close. We have a strong resistance in this area. We are at a yearly level. So I just want to make that clear. Anyways, we had a daily level over here. So what happened is, go on to the 15-minute. I want to enter a long. I'm looking for long opportunities, and I can see that we have, basic market structure. We have an uptrend, okay? We didn't have this price action yet. Okay, so let me see if I can maybe reverse it. We were over. Yeah. Okay, that's the price action yesterday that I saw. Nice little uptrend. So I saw the bounce, tick number 1. Okay, we're bouncing on the trend line. That looks great. Okay, and then when I don't want to make it too complex, but then when I switch on my session volume profile, I wanted to see where's the point of control of yesterday. And the point of control of yesterday was over here. Remember the point of control that I explained?
Yeah.
You can get a session volume profile for each day. Okay, so yesterday, the highest volume traded was here. So then I put in a line and I say, put the magnet off. Okay, cool. Tick number 2, it bounced on the highest volume node previous day. And I call it previous day point of control. Okay, now I'm like, okay, cool. Should I enter? Should I not enter? Then I go and look at CVD. And then I see, holy moly, look at this. Massive, aggressive. When it falls down like this is aggressive, a bullish CVD on both pivots. So, I mean, ignore this price action. This didn't happen. And then I'm like, okay, cool. Well, for me, this is an obvious trade. I'm going to go in, enter the position with my stop. I don't want to see us come back. Risk management. The tighter you can put your stop loss, the better. So you have to catch them as soon as they happen. And then also, so I entered the trade over here with my stop loss below. And then I was like, okay, another tick for me where I will add to my position is if we can come back to this daily level and break through it, get acceptance back above that level. Then I will add to my position. And then where's the play button here? Okay, so I was waiting. And let's let it play out. And then we got acceptance back above. As soon as we made closing candles above the daily, that's where I added to my position, the target being this high. And now you have to be patient and sit on your hands. So the first thing I did here is I took my stop loss and I moved it to break even, because I don't want price to come back down below the daily. You see how I'm managing my risk while the trade plays out. Now my position is protected. Even if I get a spike to the downside, I don't lose any capital, nothing. Okay. And yeah, I got a bit nervous, deal, should we cash out? It's like, no, leave it. And then this happened. Okay, cool.
Nice.
And then
that
played out.
Did you short that as well too after?
Yes. So let's just get this out the way.
So that's really cool, man. I want to ask a question back right there. So like my question is, so like right before I had that point of control, we see these massive wicks. Are you not like too worried about like possible wicks, getting wicked out again, like on the second round, or is it already safe to assume that usually after we have that first massive wicks on that bottom side on the point of control, more than likely it's not going to happen on the second uptrend? Yeah, because like those are kind of scary. Like those wicks right there. Like, how were you not scared of having like a very stop loss where you would have been stopped out? Or has it ever happened in the past where you do get stopped out? And do you continue with the trade? Do you patiently wait, or do you just call it a day and no longer trade it if you were to get wicked out?
I am not scared to re-enter a trade. Like, that's the one thing I think that gives successful traders an edge, is to say that so let me paint out the example for you. So I entered over here, okay? I had my stop over here. Then price moved up and I saw closing candles above this daily level. Okay, let me just take perhaps this one out the way to make it easy. Okay, I saw closing candles above the daily level. Then what I do is I move my stop to break even. I don't want to lose cash now. But I also don't want to see price action come back below this level, because now we have acceptance back above the level. So if price had to do, grab my pen, if price had to do this and stop me out, I will re-enter over here, because now we got acceptance back above the level. And sometimes what happens is it gets a bit choppy in and out of that level, but I don't mind being stopped out 3 or 4 times, not losing any capital, because as soon as I'm in the green, I protect my cash. So sometimes I will get stopped out 3 times or 4 times, but I will lose nothing. So it's persistence. It really is persistence. Mm-hmm. The reason people are scared to re-enter a trade is because perhaps they had their stop loss too low. So maybe they had their stop loss over here. They got wicked out. We get acceptance back above the level. They went and put in their whole account at 50x leverage. So now they have a whole big hole in their account. So because they've lost too much money, they put too much money on the line. They've made a significant loss, and now the trade, you often hear people say, I got stopped out and then the price did exactly what I wanted it to do anyways.
Okay. Story of my life.
This
man.
is exactly
story of my life. It sounds like you're perfectly describing me. Go all in with your account, 50x, get wicked out. That's how I'm asking. Like that's pretty crazy how that thing played out. So I wanted to ask you as well too. So like when you're trading this, are you sitting in the chart just looking at the 15-minute chart, or are you like, washing the dishes, cooking yourself some food, are you doing something else while you're, keeping your eyes like on your phone, or are you like literally just sitting there waiting for you to finish out with your position on the 15-minute chart? Or do you just have to take profits?
There's different trading strategies. So I like to play trend line strategies. It's even simpler than the trading strategy I'm showing you now. The benefit of a swing failure pattern strategy is that you can catch the bottoms and you can catch the tops. The con, or the bad thing about the strategy, is it requires a lot of screen time, because you have to monitor your trade and manage your risk. Okay. But for me, it can go 2 ways, is to say that, well, I wanted to manage my risk very tightly, but I could have easily said, okay, cool, I'm putting my stop over here at the bottom. I've planned. I think the most important thing is you have to plan your trade. You have to, before you enter the trade, you have to know where you're putting your stop loss and where you are planning to take profit. if you do not know both and you're just blindly entering a trade, hoping to make a lot of money, hope is not a strategy. You're going to see your ass and you're going to burn your account in a couple of months, if not sooner. You have to plan your trade. So once you've planned your trade, now I can go and wash the dishes because I've got my tick boxes. I've got my trend line support. I know where to put my stop loss. I've looked at CVD. It looks bullish. That is my target. So I could have entered my trade here and just left it and go and do gym. And that's what I sometimes do is to say that, well, I'm not list to sit in front of the computer now and manage my risk today. I'm willing to lose whatever I've put in my stop loss. So you have to make peace with whatever you're going to lose over here. Like you almost have to tell yourself you've already lost it. It's gone. You have to make peace with that. Not if you feel uncomfortable entering a trade, you're risking too much. Period. You're risking too much. If you enter like, I'm not sure, I'm sure we all had those days. I'm not sure. It looks like we're going up. I'm just going to put a small little position in here. If I get stopped out, I don't care. Those are the best trades. Okay.
Yeah.
Because it's the consistency of those trades over and over and over that makes you lots of profit by the end of the month.
Right.
So yes,
that makes sense.
Twofold. Sometimes I do sit in front of my PC and I watch the charts because I like watching the charts and I do enjoy what I'm doing. So if I do have the time, I do sit and I manage my risk and I build my position to a bigger position. Like this one yesterday, I added to my position when we got over here. Okay, we're getting acceptance above. So I added to my position, and then what happened is my entry moved up slightly. Okay. And then by the time we got here, I then had double the profit that I initially planned for because the trade played out in my favor and I was constantly monitoring it. But to your point, I could have just entered here and left it to play out, and I would have made half of the cash, and I potentially could have lost this amount as well.
Right. So you pretty much go in with like either break even or like pretty much losing nothing every trade almost.
Yes.
Nice.
So as soon as I see acceptance back above or acceptance back below, like what happened here, I enter. Okay. So the first time you enter the trade is where you have risk. Because now what happens is, so let's say I played this breakout of this acceptance back below the level. Okay, the first time I enter, now I have risk because I need to put my stop loss over here. And perhaps I planned out my trade to say that, well, okay, the target for me is this low over here. But then as soon as I move into profit, I immediately protect my position. And I was like, well, if I get stopped out and we get acceptance back below the level, I will re-enter. Persistence. Okay, but I'm not losing money. You know, you have to protect your cash. The market is here to take it. The market is not here to give you money. You have to protect your cash. You know, as a trader, your mindset must be, how do I protect my cash? How tight can I put my stop loss without being stopped out? I will re-enter if I get stopped out at break even because the trade is still going in my favor. Don't just put your stop loss and hope for the best and don't know. A lot of people don't know where to take profits. And I think that's how people also burn their accounts, is because to say you might be winning 9 out of 10 trades, but the 9 that you are winning, you're making 1-to-1 ratio profits. And the ones that you are losing, you're losing 3-to-1. Your R&R, you have to look at your R&R. So even though you're winning more trades, you're making less money on your wins than on your losses. Okay. Sorry, I know this is very educational. I love to educate and I love to teach people.
Man, you're really good. You're really good. I'm like sitting here, and I forget that we're on live. I forget that we're live. I'm just paying attention. It's really interesting, man. It's like definitely like you're kind of almost hitting the freaking nail on me. Everything you're saying, it's like it almost kind of pertains to me, I feel like, and I'm sure a lot of people could go ahead and relate because I know there's a lot of us here on the live stream that make a lot of money, but I've been, also telling my community, the market is here, as you mentioned, is here to go ahead and do the opposite of what I think, right? It's like, that's why you always have to stay neutral. And as a trader, what I mentioned to a lot of people is we want to go ahead and stay on the edge. Is it going to go up? Is it going to go down? We don't know, right? We really don't know. It's all about, you know, making that position and positioning ourselves to either go long or short. It doesn't matter, as you mentioned, whether Bitcoin crashes tomorrow or it pumps to 100,000. You're still going to make money. You're going to make money as it goes up, and you're going to go money as it goes down. And everybody's crying, you know, talking about, you know, this market's manipulated and all of this thing while you're making money still. So it doesn't affect you, right? So this is the reason why I tell my community, you want to go into this mindset as a trader. You don't want to go into this mindset as, you know, diamond hands, you know, hold forever, don't take profits, because you know, the market's going to do the opposite, right? A lot of people were getting, so I'm sure a lot of longs were excited for Bitcoin to hit 100,000, and the technical side just made sense that there was a probability that we were going to get rejection at what we're seeing now. Can it change? 100%. But this is the reason why having kind of that trader's mentality, even if you're an investor, you have a higher edge against the people that are shouting for $100,000 Bitcoin and don't even know what they're talking about. And this is literally like you telling us, like, you could predict, you have a higher probability of predicting where the market could go because of the tools that you're using, you know, using that volume tool. That's freaking insane, man. Like, it's pretty cool what you're showing us right now. I'm like absorbing this like a sponge right now and learning. And I'm sure everybody on the live stream is as well. We have over 16 watchers, chat. Oh, only 8 likes. Come on, let's go ahead and get those likes up. Completely free, doesn't cost you anything. And as well, I did go ahead and share DWorld's channel on the live stream as well. So go ahead and make sure to go ahead and click on the link that I just went ahead and shared. I put this right here on the live stream. This is his channel. I'll go ahead and put the link for his channel as, again. But yeah, definitely go ahead and show some love to him. We will be collaborating a lot more. He has some really good things on his channel. See, I'm learning, and that's the only way you get better in this market, right? It's from learning from other people, learning from people that are better than you, and always surrounding yourself with people that are way better than you than anything, right? Whether it's trading, whether it's you know, working better at the gym, whatever the case is always surrounding with people that are way better than you overall to go ahead and learn. So hope all of you are enjoying. Smash that like button for me. And I just shared his channel, so go ahead and check him out again. But continue on, man. Just wanted to go ahead and do some advertising.
Okay, cool, man. Thanks. I appreciate it. Yeah, for everyone that likes and subscribe to my channel, my videos are also very educational. I like to share trading strategies, predict where I think, but and I think, you know, the one thing that I do always do is I always highlight a bullish and a bearish scenario, because as a trader, you cannot choose sides, because you have to play the price action in front of you. I can have a view of, I think we are reaching the top, so I'm starting to feel bearish, but the price action at the moment is still bullish. We are still in an uptrend. We're still going up. The price action is bullish. And that's what the technicals are telling me. As soon as we start breaking and losing some levels, then I'll say, okay, from a technical perspective, we are now bearish. But I do have a sense of, I think we are very close to the top, or let me rather call it a local top for now. I think a healthier pullback needs to happen for the market to remain healthy. And let me show you some, maybe I can share with you guys some Elliott wave theory in terms of where I predict the market going in the short term. And then, yeah, we can take it from there.
Yeah, 100%, man. But can you go ahead and show us the areas where you think if we do fall below, it's not going to look too good for Bitcoin?
Cool, I will do that. Okay. Let me clean up my chart a little bit and switch on my scenarios here. Okay, go on to the 8-hour. Can even switch off volume here just to clean up the chart so it doesn't look so messy. Okay, I'm not sure if this is very confusing, but I will make and explain it as best as I can. Okay, so the basics about Elliott wave theory is that you have 5 waves to the upside. Okay, and you always have a 3-wave corrective structure. So 5 waves to the upside and 1, 2, 3 to the downside. That's usually how it works. And inside of each wave, you will see there's 5 waves inside of here if you go and count them, and I zoom in, but then there's also an ABC. We call corrective structures. The basic term is ABC. You get other ones, but I'm not going to go too technical because I'm going to lose people in the process. Okay, so you'll see here 1, 2, 3, 4, 5. Okay, A, B, C. Okay, that's your corrective structure. So to keep it simple, you have 5 impulses to the upside, and I've been tracking this price momentum from the 11th of September. So here we have now almost completed the fifth wave, and now it's how high can we go, or are we starting to go correct here? So your third wave is usually your most impulsive wave. That is the nicest wave to trade from a trading perspective. When you can identify that you are in the third wave, that is where you have your beautiful bull flags and you play the breakouts and everything just goes your way. You don't get stopped out. The price just moves in the direction you want it to move in. And then your corrective structures, that's where things gets difficult. It's choppy, you get wicked out, you get stopped out, your stop loss gets hit, and then the price moves in the same direction. So what I like about Elliott wave theory is when you can start identifying in which wave you are, I will then apply a different trading strategy to it, because corrective structures requires a different trading strategy than a third wave structure. And I'll show you guys something interesting on Solana as well, where you can make boatloads of cash with one line, just one line. If you just at least know, so you can go, if you don't know Elliott wave theory, go follow someone on YouTube that specializes in Bitcoin Elliott waves, and they will tell you, I think we're on the third wave. Then you know, here comes my one-line strategy. We're going to make some money now. Okay. Anyways, before we get to that, let's
follow you for that, right? Is that the kind of content you provide, Elliott wave theories on your videos?
I do, and I know there's some other guys that's also very good. I'm not going to mention names, but I have learned from the best. I mean, I also had to learn, and those best people are also still on YouTube. And yeah, Elliott wave theory, unfortunately, is one of those theories where you can never stop learning. It is mind-boggling and extremely complex. And I've been studying Elliott waves now for 4 years, and I'm still learning.
Wow.
Yeah. Okay, so the one thing, so this is one scenario that I'm watching. And remember, this is not the scenario. And this is not the scenario that is going to play out 100%. I have bullish and bearish scenarios, depending on what I'm watching. Okay, so this is the bullish/bearish scenario that I'm sharing with you now, is to say that, well, what if this is a wave 1, 2, 3, 4, 5? And you can see 5 has hit my target. Okay, so what if that is wave 5? And generally speaking, your wave 5 is almost the same size as wave 1, just generally speaking. And they look, wave 5 already looks longer. So that concerns me, is to say that I feel that the top is very close, if not in already. Okay, so we can still spike a little bit higher over here. And then, so I'm looking at this structure on the 8-hour from the 11th of September. Now I want to go and look at the macro structure to see that, well, do I see levels of confluence over there? So I can switch this off, go into the daily, and then just look at this entire move that we've made since we hit the bottom here on 9th of November 2022, is to say that, well, here's also Elliott wave. Okay. The simplest way I can explain an Elliott wave is, do you guys know that dinosaur with the fins on its back? Okay, the dinosaur with the fins on its back. That is Elliott waves. You'll see price action moves in waves, and it reminds me of that dinosaur with the fins on its back. Okay, that is called an Elliott wave. And then
big dinosaur, right?
Yes.
I forget what the dinosaur's called. I think I know what you're talking about.
Yeah, I had a picture of it somewhere.
Anyways, I'm over here thinking of dinosaurs. We're talking about TA. You got me a little distracted, man. I apologize. I'm like, dinosaurs? I'm like, where? I kind of that actually looks like a dinosaur a bit, man.
So any price action, regardless of which time frame, has an Elliott wave inside of it. So you see here on the daily, Elliott wave, Elliott wave, Elliott wave. That is what you call an Elliott wave. It's a wave of how the price is moving. Then you get a bigger wave. And also when you start zooming in here, let me just take this out so not to confuse anyone. Here's an Elliott wave. So there's an Elliott wave, Elliott wave, Elliott wave, Elliott wave, bigger and smaller ones. And then you can go even onto the 1 minute. You know, let's keep it. Look at the Elliott wave, Elliott wave. All waves, price moves in waves. So what Elliott wave theory does, it teaches you tricks and ways to track where the next wave is going to go to. Okay, it's tracking human emotions. Right. Now that I've got that little bit of education out the way, is to say that, okay, looking at this structure over here, what I'm seeing is to say that, well, this looks potentially like a 1, 2, we're busy with the third wave, and perhaps we'll come down for the fourth and then a fifth. Okay. And that's why I'm saying I think the local top is in. We can still go higher, but we just need a little bit of a cool down. Okay. We just need the market to reset a little bit because there's still momentum to come to the upside. Some people actually like me to do this, put in the lines. I take it out because I don't need them to show you where price action is going. Okay, cool. So this is what I'm kind of seeing now. So as an Elliott wave trader, I know that the target for the third wave is the 1.618. It's a common third wave target. How do you work it out? You take your fib-based extension from the low of 1 to the high of 1 to the low of 2, and you drag it across. Okay, so the 1.618 is a common third wave target. It's one of the first things that you learn in Elliott wave theory, is to say that, okay, based on what I'm seeing over here, perhaps we still have upside to $51,000. You go and complete this third wave. So perhaps another spike up, and then we're going to start correcting. Okay. So I kind of feel like the top is close and it could already be in, because the third wave target doesn't have to hit the 1.618. It's just a common third wave target. As long as your third wave is not the shortest wave, it's a valid wave. And you can see the third wave is way longer than wave 1. Okay, so it's already valid. And so I do still see some upside potential, is to say that, well, we can come and hit the $51,000 level for then a correction to the downside, or we can correct from where we are right now because we've hit that monthly point of control and the 0.618. So perhaps early shorters, well, that's what you have to bring market psychology into it as well, is to say that perhaps there's a lot of liquidity lying here because people saw that number being hit, 100x stop losses above, and then what the market loves to do is it just likes to go up one more time, grab that liquidity, and then fall down. Okay, so it would be nice to get that one more week up just to grab the liquidity, and then we can come and complete this fourth wave. And I'm not sure where the fourth wave will end. The rule about the fourth wave is it needs to be longer than your second wave. You'll see that's your second wave over here. So ideally, you want your fourth wave not to be the same length. You want it to be longer, and not necessarily deeper, but just longer. So perhaps this trend line will be the bouncing area, okay, for this correction. So nice sideways correction. Also, what will happen is often you will see with a wave 4, because it's choppy and it goes sideways, you will still see altcoins exploding, because Bitcoin is not doing this. It's doing this. Okay. So from a macro perspective, this is basically what I'm looking at, is to say that we can still come and claim this high. Okay. And the other thing that I'm keeping in mind is to say, well, what if price goes to $100,000? Elliott wave theory states that the third wave loves any 618 target. So when you zoom in, it can go to the 2618. It can go to the 3618. It can go to the 4618. It can go to the 5618. So for now, because of the resistance that we've identified, we are at the value area high, point of control, 618. Also a common third wave target. It is a possible turning point, but the third wave can, I just want to highlight, can do this and then start correcting to make the fourth wave to bounce on top of this resistance for then continuation. So it's not guaranteed. Okay, it's just trading is a game of probabilities, and the more boxes you can tick to enter a trade, the better. Okay, so at the moment I have a lot of boxes to tick from a resistance perspective. And I would expect us not to just smash through here and continue to the upside. I would expect us to really struggle to get through this area because there's massive resistance above us, massive. And we're going to need, like, genuinely high green volume needs to kick in for us to break through here. And perhaps the ETF is what we need to push the volumes through. But the one thing I also do know is that I think I still have my news articles open here somewhere. I wanted to show you guys this. Okay. It just feels like every time Wall Street gets involved, we reach a top. Okay. CME features launch, Coinbase IPO, the features launch on 7+ Bitcoin, Bitcoin spot ETF launch. It feels like every time there's a big thing, you know, sell the news, buy the rumors, sell the news. Could this be the turning point as well? And yeah, definitely something that I'm keeping an eye on. So I cannot
glad you
guarantee
shared that, man. I'm glad you shared that. that this is something I've been looking for the longest, and I've been telling my community. I'm like, every time Wall Street gets involved or some sort of like financial tool gets released that it has to do with Bitcoin, it always corrects, right? And that's why I was telling everybody what's going to be the difference between the ETF that we have now. And you know, at least for me, still, I think today is still Thursday. Yeah, today is still Thursday for me. Today was the first day of the ETF being traded on the stock market, and it had that slightly pump where we saw that $49,000 being touched, where you mentioned it was part of the 618. And I remember that because I was also watching Andy live a few days ago, and he was talking about the 618 retracement, exactly what you're telling me right here, but you're telling me now with Elliott wave theory. And it just so happens that it also got rejected around that area, right? So is there a coincidence that, you know, every time Wall Street gets involved, it dumps, it's aligning with the 618, we're seeing, you know, high levels of resistance. It's like people could go ahead and continue to make these reasons why $100,000 is possible, but the technical sides are kind of giving us like all the signals of what typically happens, right? If let's say tomorrow, you know, market opens green, we make new all-time highs, then I guess it will break the stigma of every time Wall Street gets involved, or you know, some financial instrument gets released with the financial markets. It's not gonna go ahead and dump, right? But it seems like right now Bitcoin is it's doing that, and that's what it did, right? So it's actually quite interesting. I'm glad you share that because I've been trying to tell everybody, but I never actually had the actual chart and all the data, right? But I remember hearing these news, and I'm like, it can be like, what difference is it going to be now, right? And it's crazy how you're showcasing all of this with the Elliott wave and the 618. It's mind blowing, man. It's mind blowing.
Okay, yeah, thanks. So yeah, I think from you know, without keeping it too complex, this is what I'm seeing in the market. I feel like the top is close, and there is always the possibility that we're going to break through here and just continue. But I mean, you know, just simple. You have a push up, you have a nice correction. You have a push up, you have a nice correction. Push up, nice correction, and now it feels like this has just been a straight line up. Where's the pull off?
Yep.
It needs a pull off for Bitcoin to remain healthy. If we had to do this, I would then consider this as a corrective structure to the upside, and without getting too technical, where this again, people hate me when I share this scenario, where this is basically where this is, take this out. Sorry, I just want to take the scribble out so it looks nice and clean. Hide some of these things that I've just drawn, where this basically becomes an A, B, C, A, B, C. Okay, so this then becomes an A, B, C to the upside. And what does that mean? Corrections are not down. Corrections can be any direction. Okay, you have to, a correction is based on impulses. So you could arguably discuss, and people don't like it when I share this, but I have to, as a trader, have both scenarios. These are impulses to the downside. There's 1, 2, 3, 4, 5. And what if this is a correction to the upside? 1, 2, 3. And what happens after you have a correction? You have more impulses to the downside. 1, 2, 3, 4, 5.
Do you think we could get to those levels? Anything's possible, right? Bitcoin could surprise us.
So I have to share from a macro perspective, there's also a bullish case and a bearish case, is to say that we don't know what's going to happen tomorrow. What if World War III breaks out, or there's another, you know, Russia attacks another country? I can't predict the future, but I am keeping bearish scenarios in mind as well, as to say that this can be just a correction to the upside. Then we're going to find momentum to the downside. So I want to always have dry powder on the side to buy up the lows. But
That'd
For
be
now,
crazy.
with the ETF news, let's keep it realistic for what we know today. Perhaps this structure will not play out, where this was 1, 2. Okay, wait, grab my pen. Where this was a 1, 2, 3, 4, 5, and we had a small little ABC correction here somewhere, ABC, and we are now starting to build impulses to the upside. 1, 2, 3, 4, 5. Okay. So
I have a question, Devo. So for the ABC, I'm assuming that's after a downtrend, right? That's kind of like the end of a downtrend is the way you measure it with the ABC structure, or is it different? It just depends.
Sorry, just say again.
So on the ABC, when you're using that, is that similar to the Elliott wave theory?
Yes, ABC is part of
Okay.
Elliott wave theory. Yeah.
Okay.
So
Okay. I was getting
your impulses,
confused with the 1 wave, 2 wave, 3 wave, 4 wave, 5 wave.
yeah, sorry, I actually did that count wrong. Just now, there's an Elliott wave trader on here, and he's like, "Oh, devil, you don't know what you're talking about." Is to say that let's just do this. Elliott waves, 1, 2, 3, 4, 5. Okay, that was the bull cycle, and now we had an A, B, C, and now we're starting a new bull cycle. 1, 2, 3, 4, 5. We're going up again. Okay, so that's the bullish scenario. The bearish scenario is that you just flip it around, where this is an A, B, C. We've made impulses to the downside, and this is now corrective.
That
going
makes
up
sense. That makes sense. So usually with the Elliott wave theory, once we get to the 5th wave, that usually technically signals some sort of near top, is what I'm
Yeah,
understanding,
the 5th
right?
wave is the top. There's no 6th wave. You only get 5 impulsive waves.
Right. So
Only
the fifth wave is what signals the top, right? Is that correct?
Yes.
Technically,
Yes.
usually we have that's why the Elliott wave theory is so important, because we usually have all the way up to the 5th wave where it usually calls a top, just like the scenario you showed us right there. We were on the 3rd wave. Everybody thought it was over, but we retraced down to the 4th wave, leading onto the 5th wave, which called pretty much the top of the market at that point. You should have already
Yes.
had some sort of idea with the Elliott wave theory, and then using the ABC. That's freaking crazy, man. That's insane.
Yeah, so I can almost guarantee you a good Elliott wave trader would have taken profit over here.
Yeah.
Done. I'm out. And everyone lost money except they, because they know Elliott wave theory. And that's why Elliott wave theory for me is so bloody interesting, is to say that, well, in this little structure that we have over here, I've already now gone through some Elliott wave theories. So let me switch on my scenario 2. Where's my scenario 2? Over here. Okay. So I've just explained this structure, 1, 2, 3, 4, 5 potentially, but now going into the smaller structures over here, I can already see, well, okay, 1, 2, 3, 4, 5, we are close to the top. This is, if I have spot bags, this is where I start taking profit. Okay, even if price goes up another $2,000 or $3,000, I don't care, because you can never catch the top, but you can be close enough.
Exactly.
Okay.
Yeah.
If we, so where I would then re-add to my spot bags is to say that if we had to break through here with, sorry, my pen, if we had to break through here with high volume and consolidate above, I would add back. This is my consolidation area where I add back to my spot bags, because as soon as you break through with, and you want to see massive green volume kicking in here, because we have big resistance on top. Okay, you want to see a nice little green candle. You want to see us break above these levels, consolidate above, not chop through back. You know that's a swing failure. As soon as you have acceptance back below the level, you short. Okay, when you consolidate above, you build your position with your stop below. Then you have continuation to the upside. So it's 2 ways to play it. But for
So
me,
you would short it. You would short it when it retests the area of resistance, which was once a previous area of support. Correct? Is that when you would do a confirmation that you should probably be shorting that?
Yes. So if we had to come through here, this level that I've identified for everyone, if we had to come through here and we go back down, that's my ticket to short.
Okay.
Stop below, and then as soon as you start going into the green, you can move your stop loss to break even. Okay. So these are basically the scenarios. The one interesting thing I wanted to share on Solana, for example, where I made lots and lots of cash. I'll be honest, I really enjoy trading Solana because this is a wave 3. Okay, you have a 1, 2, 3 to the upside, and now we're busy with the 4th corrective wave. So I think Solana still has some petrol in the tank to come and claim these highs. It just depends on how long this correction is going to last. But when you start zooming in, and this is where it gets very interesting, is to say that when you've identified your 3rd wave, look how easy your trading strategy becomes. So let me go back here to the bottom. Okay. You see the push up in Solana and you're like, okay, hang on, what is happening here? So I think this is where I started trading Solana with one line. Switch the magnet off. Okay. Play the breakout, stop below the previous low. Target being the high, always. That's my trading strategy for the 3rd wave. Where's my brush? Target, always the high when you're in the 3rd wave, and I play the breakout with my stop below the low. Boom. Okay, and I will always leave some of the position open just in case. So maybe I'll take 60% or 70% profit and I'll leave some of the position open. Okay, so there was my first trade. Then this happened. Okay, one line, you just draw a trend line. Boom, stop, high. Okay, so 2 trades successful. No, it doesn't come and stop you out. 2 trades successful.
You're still holding on with your 70% bag on though, like after every one of those trades?
I'm adding to that position the whole time on my way up. So I'm taking profits, but I'm still adding. So what happens here is to say that I opened the trade. I left some of the position open. I actually targeted this high. I left some of the position open, and then it just went, and then I identified the trade. And I was like, okay, hang on. If I break out here, I'm adding to that position again. So it's already now a big amount anyways, but I have taken some of the profits already. And then we move up. I identify another trend, and I've taken my profits here at the highs, make a trend. I add to my position again. Okay, another trend.
Nice. So you're like the Federal Reserve, just printing money out of thin air, man.
Okay, and now currently I am tracking this momentum, waiting for the breakout to the upside. So this is quite a bigger structure, and this kind of tells me also that the end is close from a 3rd wave perspective, because the correction is so big and so deep at the moment.
So when it's bigger, that means it's near the end then.
Yes, or you're busy with the 4th wave. You're busy now completing. The 4th wave is usually a 4th corrective wave is extremely boring to trade. Okay, it's very boring because it's literally choppy, slowly down, slowly down. But you could have made, just using one trend, a trend line strategy where you play the breakout, you play the breakout, you play the breakout, you would have not lost one trade.
Yeah, that's crazy, man. That's crazy. So okay. My price target for Solana was, I think, roughly like around 145, 135. And now that you're mentioning this, because I don't know how to use LEO wave theory, right? I never knew how to use any of this. Like right now, I'm like learning so much, and it's kind of crazy because all I really just do is just basic, just very simple support and resistance, right? And based on what you're telling us right now, it almost seems like we're probably close to one last pump before we have some sort of nice little correction in the market, right? So that means ideally Solana could still be consolidating at these levels, maybe slightly touch around the 80s, and then literally just take off to 100 and probably 45 or $200, right? And that could be possibly the last final wave before we have a correction from there, right?
Yeah, and it's actually quite simple to work it out because I know the rules of Elliott wave theory. So now I can go and work on some if statements, is to say that, well, let's put it here on the logarithmic. I like sometimes the log, so that shows me the waves better. So
what does that mean?
So logarithmic is, it shows your price action better. I don't know how best to describe it, but you can see we're going from $11 to $100. And I can see the waves better because it works in percentage.
It kind of zooms it out.
Yes, and where the normal, I don't know what you call the normal one, it kind of condenses everything to where you are right now. And when you want to, when you zoom in, everything's just flat. I can't see the waves properly. I don't know how else to explain it. Perhaps one of your community members has a way better explanation than I do. But from a logarithmic perspective, now I can identify the waves better. So let's go on to the 8-hour. And I can go start working out the Elliott wave targets, is to say that, okay, well, if this is a 1, 2, 3, wherever 4 is going to end, and we still need to make a 5. Okay. First rule is when you take a normal fib from the bottom of 2 to the top of 3, potential top of 3, is a fourth wave is not allowed to touch the 618. Then you've counted your Elliott waves incorrectly. So common bouncing areas is your 382 and your 50%. Okay. So we can come and tap even the 236, 382, or the 50%. So it's quite a big area from $77 up until $46. That's how deep this retracement can go. Just to put it.
What happens if it does touch 618? It's not possible. It's not possible for 618.
So if it is a fourth wave, it won't. It won't touch the 618. If it does touch the 618, then you've counted your structures incorrectly, and potentially any move up is corrective, and we're going to start making impulses to the downside.
Okay. So how do you count them correctly, man, if you don't mind me asking?
Okay, so it takes experience, and it takes counting a lot of Elliott waves on the 1 minute.
Yeah, because I'm sure a lot of people are like, well, it sounds freaking cool, but like, how do I use this myself? Because I'm sure, like, as soon as we're off camera, I'm gonna try to figure this out. I'm like, okay, I give up. I gotta learn more. But no, this is really interesting, man. The Elliott wave theory it's mind blowing, man. I'm like mind blown right now with everything that I'm learning right now. So there you hear it, chat. The only way you can learn it is just through experience, is by doing it over and over again. Can you tell people like how long it took you to go ahead and really, learn this? Because a lot of people always want to start right away. And I tell them that you definitely do not want to go ahead and jump into this very, very quickly. I always just give them the advice to, pay attention to people, watch live streams like what we're doing now, and talk about, listen to what we're saying, and then learn from there. That's one of the best ways. Or even if you really want to get exposed to the market, have some little money and play with it. But ideally, I always say, either learn from other people through YouTube videos such as us. I think live streams are the best way because you could engage and ask questions. Read books. I was reading Trading in the Zone recently. I'm going to go ahead and go back to listening to that again. But what is your advice, man? Because a lot of people like love hearing all of this. Like I just pretty much said, I just pretty much told everybody you're probably printing money like the Federal Reserve on Solana, and people are probably like, how can I do that too? Like, how can I make money, right? So they want to quickly jump into trying to make money very quickly on trading, especially leverage trading. But what would you suggest for someone coming into the space, learning what you're showing? What would you tell them if you were to start from ground zero? Where would you say that you would want to start ideally from yourself?
The one thing I will say is that you can make it. Okay, let me start. When you have a 9-to-5 job, you have to put in the hours. So let's say you're a developer. Okay, you have to go and learn new coding languages. You have to go and keep up with the latest trends, with the security that's out there in order to protect your customers' software, whatever the case might be. You have to go and further your studies, maybe go and do an MBA or study a degree in Java or whatever the case might be. The point that I'm trying to make is, in order for you to become better at what you are currently doing, you have to absorb knowledge and grow yourself as a person, and you have to be committed to that. Okay. And I think the biggest misconception in trading is that I'm going to leave my 9-to-5 and only do trading for a living because it's easy. It's not easy. It's not easy. And it's not because of technical waves or Elliott waves that I'm showing you here. It is because you really, really start to learn who you are as a person when you start trading, because the greed and the emotions comes out, and And it's easy once you put down your rules and you say that, okay, this is a 9-to-5 job. I only do trading for a living. I need to give it the attention it deserves. I have to stare at the charts for 9 to 12 hours a day to get the experience so that I can look at a chart without even putting a line on it and tell you whether it's going up or down. You need to have that type of experience already. Just by observing price reaction, you know what the next move is going to be. You have to put in the hours, and then you have to be disciplined, is to say that when you've built a plan around your trading, is to say that this is how I enter a long, this is how I enter a short, these are my tick boxes, and you become robotic about it because you're following your plan, you're planning your trades, and you're letting them play out. I think you have to be committed, you have to be disciplined, and you have to stick to your rules, and you have to find the trading strategy that suits your personality. And what I mean by that is some people are not, so perhaps you are not a patient person. You are extremely impatient. What I would then recommend is perhaps you need to start a scalping strategy where you go into the 1 minute and the 5 minute time frame, and you are in and out of the market. You do 10, 20 trades a day, depending on what the market offers you. And because you're an impatient person and you use a MACD strategy, for example, another person will say, I have enough money to do 1 trade a week. I'm lazy. I want to go play golf with my family and friends, and I don't want to stare at the charts the whole time. So you then develop a swing trading strategy for yourself. But the thing is, you have to choose, and you must probably going to have to experiment with all the strategies and choose the one that fits your personality. Am I impatient? How much capital do I have? Because the capital that you have also determines on what trading strategy you need to apply. If you're starting off with $100 account and you want to leave your 9 to 5 and you need to pay yourself a $2,000 salary, it's not going to happen. Okay. You might make a lot of money now during a couple of meme coins with the bull market and stuff, but what are you going to do when the bear market hits? And what are you going to do when you don't have good risk management? You have to be consistent. And the only time you will know that you are successful is if you, and I always tell my community as well, I love your P&L screenshots, but it means nothing to me. I want to see your weekly P&L screenshots and your monthly P&L screenshots. Can you consistently make money every week and every month, 10 or 20%? Okay. It's the consistency that's key. So for me, the trading strategy and the Elliott waves shouldn't scare you about, I don't know that, therefore I can't trade. I've just invested so much time into trading because I really, really, really wanted to understand the market. And I tried literally every single trading strategy out there. And I can tell you guys right now, a simple, without knowing all of this junk that I've got on here, okay, a simple trend line. Let me undo this. I tell people, even if you do not know Elliott waves, all you need to do is track the, let me put it back onto, okay, all you need to do is you need to know how to track a momentum to the upside, and you need to know how to draw trends. And you have to be disciplined. So if you want to be a trend line trader, which is, in my opinion, the easiest strategy out there, and you will still see a lot of people lose money with a strategy because they don't follow their rules. They don't apply good risk management. They go 100x their whole account. It can only go up, and then they get stopped out, and then the money is gone. Is that go and find YouTube videos about trend line traders. Gareth Soloway, I'm not sure if you guys know Gareth Soloway, considered one of the best traders in the world. Okay, go YouTube him. Go. I think he's been on a lot of shows as well. He uses trend lines. Okay, there's many YouTubers and successful traders out there that only uses trend lines. Yes, they know Elliott waves and they know all of these other things as well. But you can be an extremely successful trader by applying good risk management and knowing everything there is to know about a trend line. You get your home line, you get your safety line, you get your exit line, you get your entry line. So I can go into more details just about trend lines, but you need to go, Devold, I love the trend line strategy. Then go watch every single YouTube video that you can find on trend lines. What are the rules? Closing candles above, closing candles below. How do you apply risk management? practice it. Go and put $10 into an account and go and practice that strategy. Don't try and learn a strategy and put your whole life savings in during that process. Go and take $10. Literally, you have to take real money. I don't believe in trading demo money because your emotions don't get involved. You have to get your emotions involved to learn.
Yeah,
and then
I think the best feeling is that person, that new trader, actually experiencing what it's like losing the money. Because a lot of people are like, I think it's really easy when people are like, oh, it's really easy. You just buy, you just buy at the bottom, you sell at the, at the top, and it's like, yeah, bro, it's really easy for you to say that, but how about you actually put your money in a trade? Let's see how well you actually do, because it's different when you're either just from a perspective saying it's really easy to find tops and bottoms, or demo trading and being successful, because you don't know what the feeling is when you're actually putting 10, 20, 40, 50, $100,000 on the line. Yeah, you're going to be a little bit panicking if you think you're not confident enough with your trade, right? So I agree with you. I would always I always tell people, even if you can start with like $1,000 max and just go in with the learning curve of knowing that there's a possibility you're going to lose your $500. I always say it's better for you to lose that money that way, learning, because you're going to understand what the feeling is. Maybe it's a wrong thing that I'm pushing out there, but in my opinion, I don't like the demo either. I've never done demo, and I think for me personally, the hardest thing, and that's what I'm glad you're here, showcasing your skills to not only myself, but the community as well, because I'm sure a lot of us are learning right now from you. For me personally, like one of my biggest issues that right now that I'm having personally is like what you mentioned, even with the Elliott wave theory, you kind of already know because you've looked at it so many times, right? I'm kind of almost similar with what I look at the charts. Like for me personally, I don't go into these like huge technicals as much as you do. I really keep it very simple. That's kind of my style. I kind of realize that it's sometimes, depending on the kind of style that you are as a person, as you mentioned, sometimes it's better just to keep it very simple, right? Depending on what your style is. For me, it's very simple: support and resistance, and that's about it, right? And even when I do use Fibonacci retracement on the 618, it usually always aligns to where I'm going to be looking for a nice area of support, or if I'm looking for what is it called, supply and demand, right? So even without me actually having to put a line, I already know automatically where supply and demand is going to be, right? And that's only, as you mentioned, just from you watching the charts, you understanding how the market moves, maybe sitting there for hours, literally watching the price actually happen. And that's really the only way you could go ahead and really learn, is just literally just through experience. Like one thing that you mentioned, like for me personally, what I like to use a lot when it comes to my strategies is I like using the DXY a lot. I like using the US 100, and I like looking at what is going on with the fundamentals of the US market. That's what I put my trading style into, and that's how I could understand where there could be some sort of reversal, regardless with interest rates, what the Fed is talking about, how the balance sheet is doing. That's usually what my style is. But I'm glad you mentioned that, because a lot of people think it's a one size fits all, and it's like whatever you enjoy. It's like for me, I find pleasure, understanding like what's going on with the U.S. economy, how the DXY is moving, how the US 100 is moving, and then I kind of apply that with Bitcoin dominance and Bitcoin, and just use kind of simple support and resistance. But the thing is, I don't do that much scalp trading, right? I've been trading a lot of like meme tokens mostly, now pivoting into doing this new transition into higher cap altcoins and Bitcoin. So the strategies that you're mentioning, man, these are very, very powerful, and it's freaking crazy, chat. So all of you watching right now, you guys are really, really lucky having DWOLT here. As I mentioned, go ahead and check them out. We will have them often, and we're going to try to collab as much as possible, because I'm like literally learning this. Like I hope all of you are doing the same thing, right? The worst thing I always tell everybody is, as soon as you stop learning and you think you know it all, that's the time you start losing. When I was, disciplined when it came to my trading, as soon as I thought I knew and I was better than everybody, my ego came in. That's when I started losing money, right? When you start taking those bigger positions. The crazy thing too, man, is one thing that I learned from Andy from Bitcoin Senses is he always mentions in his chat, right? He always mentions the more you trade typically means the more money you're going to lose, right? And that's one thing that I'm trying to go ahead and get myself on. I understand. I would say I'm a pretty good trader. I'm a decent trader, not as good as you. But that's why I'm learning, you surround yourself with the best people, be around with the best to be the best, right? So I would say I'm a decent trader. I'm not going to say I'm the best, but I'm better than the average person. I could go ahead and be a little bit on the technical side, have some sort of conversation. But my biggest weakness, man, is being disciplined. That's what I'm working on. I feel like for me is knowing not when to trade and learning when to actually take a trade. Or when I say I'm not going to take a trade, not taking that trade, right? And right now, for me personally, that's what I'm struggling. It's really the discipline, planning out a trade. Do you have any advice for myself and for everybody watching right now? By the way, chat, smash that like button for me. Over 17 watchers right now, only 8 likes. Come on, completely free, doesn't cost you anything. This is knowledge, all of you are learning from D-Will, right? People pay thousands of dollars for this kind of information. So go ahead and smash that like button. It does help support both of us. You could also go ahead and check his channel down below. But with that question that I asked you, man, what would you suggest? One of the ways, if it's not directly to me, but what would you say would be one of the best ways to work on a discipline? Is it writing a journal, planning out your trades, looking over your trades? What is your strategy personally? And what would you, I wouldn't say advice because none of this is financial advice, right? But as a friend, what would you tell me? Hey, John, this is probably what you could go ahead and work on to work on your discipline.
Yeah, it's not an easy question to answer, and to teach yourself discipline, some people need a personal trainer in order to go to gym, and some people can just go by themselves. And you need to know yourself well enough, because if you cannot be disciplined with trading, you will never succeed. I'm telling you now, if you cannot be disciplined and you cannot stick to your trading rules, you will fail. And maybe not now, but in the long term, your account will slowly start to bleed out. You have to, unfortunately, become very robotic about how you trade the charts. And you have to have rules. And the easiest way to identify weaknesses in your trading strategy is by having an Excel spreadsheet and saying, I'm opening along at this price. Here is my stop loss. Here is my take profit. What the spreadsheet does, it does sound like a lot of work, but what it helps you to do is to tick your boxes and plan your trade, is to say that, oh crap, there's a field that asks me for my take profit. I didn't even think about that. There's a field that asks me, where is the Fibonacci level? There's a field that asks me, is there lots of green volume or is there lots of red volume? Are they closing candles above the trend line, or are you building a position in anticipation of the breakout? So, John, I completely agree with you there. A spreadsheet to track, at least in the beginning, when you are not making profit, or you're making massive amount of profit this week and you're losing it all the next week, is journal your trades so that you can learn from yourself. And I also have a little section in my when I enter a trade on my journal to say, how am I emotionally feeling today? Usually when you're feeling a bit down or depressed, you've had a fight with your spouse or partner, it could influence the way that you apply risk management and how you execute the trade. So I can, for example, identify when I'm very happy and excited, I lose trades because, yeah, I'm happy, I'm excited, I apply more. It's going to go up. Life is okay. When I'm feeling depressed and sad or neutral for the day, I generally make more money because I'm more cautious. I look at the data more carefully. And it's strange how that works. You would think that it works the other way around, is that when you're happy and you're upbeat and, nothing can go wrong for the day, maybe you won the lotto or something great happens that, the trades are going to go your way. But I think it really is about learning yourself, and no one, even myself in the beginning, no one wants to hear it, but you have to backtest your strategy. You have to backtest your strategy. When you go onto TradingView, you will see there's a little replay button over there. That button and you need to become the best friends under earth. You go and you replay all of the price action as far as you want to go, and you say, okay, I'm now going to start a trend line strategy, and I am going to open up a paper trading account here on TradingView. Okay, you can play with demo money here on TradingView. You don't even have to open up an exchange or anything like that. And I'm going to practice my strategy. Where would I have entered? Where would I have exited? And you go and you play out the price action and see if you make money. Everyone talks about it, but no one does it. When people say backtest your strategy, everyone's like, nah, I want to trade now. I want to make money now. It's the greed. It's the, I've got my life savings. I'm going to put $10,000 on the line. Nothing can go wrong. Let's go. And then boom, you lose half of it. And then the revenge trading starts to kick in. And
Yeah,
so, yeah, I would
100%,
say,
man.
Yeah,
I'm 100%. I'm glad he mentioned that because I mean Stan likes him. He says bring this guy back on. He is great. So see, people are loving you, D. Well, yeah, we're definitely gonna go ahead and have him again. Someone said thanks for having him as well. We will do ICP after we do Solana. We could go ahead and talk about that. But I do want to go ahead and mention, man, you're completely 100% spot on because when I was leverage trading, what was it? I think it was Pepe 2 or something like that. I think it was like 150. I turned that into like 20 grand. That took me about I think like a month and a half or two. But I was having like some endless nights, right, man? So like I kind of learned a lot from myself too. By the way, chat, as I said earlier, we're just tuning in. I literally just started leverage trading crypto like literally back in March. So I've been like learning how like the liquidity works, how stop losses work and all of that because I was mostly trading on the DeFi sector, right? So trading mostly like like all the meme tokens, trading tokens that are not even out on exchanges. So whole completely different ballgame, by the way. But I started trading, leverage just in March, and I've been learning all these, like I've been trying to figure out like what works and what doesn't. And I've blown through multiple accounts, man. Like I've literally blown through multiple accounts just through trial and error, just blindly, as you mentioned. I want to trade now and then just throw my money. I'm like, oh snap, what is liquidation? Liquidated. You know what I mean? So like back and forth. But the reason why I'm mentioning that is because when I was somewhat disciplined, when I had my $100 and I turned it into $20,000, I was doing good. I've noticed when I started doing bad was when you were saying that, when I was happy, when I was like excited, I was like, yeah, it's turned to $20,000 into $100,000 now, right? So now you're feeling more because of your confidence, because you're making really good trades. Now you're upping your leverage. Now you're going up a lot bigger with your account, right? Now, instead of trading with $1,000, it's different when you're trading with 20, 40, $50,000. And that definitely is a different, mind game right there on its own. And for me personally, what I've noticed affected me is during that time, I decided to go on vacation. And while I was on vacation, I was trading. Dumbest thing I've ever done, man. Dumbest thing I ever done, out in the lake with my positions open. And then next thing you know, I'm over here getting no signal when I'm out in the lake, getting literally liquidated and getting stopped out. Where I kind of noticed where you mentioned, that's why I asked you, like, what do you do? Do you usually put your stop loss and just, call it a day, or do you close your trades before you do anything major? Like for me personally, I realized that when I was out on vacation, you have to treat trading as a 9 to 5, in my opinion. You have to treat it as a job. I think people try to get fixed with this, like, oh, you could travel anywhere you want in the world, make thousands of dollars out of thin air, make all this money, live this crazy lifestyle. Yes, you can, but you can't be like partying every day and then thinking you're going to go ahead and destroying the charts. It's like literally going to the gym, right? You can't get hammered for 2-3 days and then expect to bench press and beat your PR that you did a few days ago, right? And that's what I think people have to understand, that trading is just as important, not only with your health, but also you have to take this serious. This is not a game. That you can't go ahead and trade and be in vacation, drinking, getting hammered, getting wasted, and expect to perform good at the charts, thinking that you're going to make money out of thin air. You could get lucky a few times, but once you're out of luck and you're probably getting hammered from the day before, you're not going to think as quick. And I've noticed myself with that, when I thought, okay, now I've made some money, I had a pretty good trading month. Let me go ahead and relax, enjoy vacation. And I'm out of vacation with still trading with, now I learned that if I was to do that, don't trade at all. Enjoy vacation. It's either you trade or you enjoy vacation, right? So it's actually quite interesting how you mentioned this, man, because I think a lot of people are fixed with this make money quick anywhere you want, but this requires a lot of freaking work. Like I think I probably, like, within those 2 months that I was trading and I made about the $20,000 with $100, I had like endless nights, man. I wasn't sleeping. I'm talking about I was probably sleeping like 2-3 hours a day, wasn't going out, sitting in the charts all day. Like literally my mental health was like out the roof, where like I was like, dude, this thing's like stressful. Like this thing's super stressful if you don't know how to have a life balance. And now, like for example, when I'm trading, I try to go out at least, you know, twice a day, go out for a walk, try to see the sun, because you could literally be stuck in your room all day if you don't have much going on with your life. Like me, I just live stream and trade. So I really don't have much going on with my life, man. So you know what I mean? For me to not get out of my room, it's not hard. It's really not difficult, right? But I started implementing where, like, you know what, I got to fix my diet, the way I eat. I think that really does affect the way you trade, in my opinion. I'm not sure if you could agree with that with me. Working out, it looks like you work out. I'm sure you definitely have some sort of schedule every day to go ahead and help you trade. Do you believe that it is important to also keep in mind other things, such as the way you eat, how much sleep you're getting, whether you're drinking too much or you're partying a lot? Do you think that has anything to do with your trading ability? For me personally, I say so. I say it is very, very important. You got to kind of keep it as if you're an athlete training. But what is your response to that? Do you have some sort of routine for you personally where you go out for a walk every day or anything like that?
Yes, for me, I am a routine-driven person, and I know not everyone is like that, but I have to wake up before the birds wake up in the morning. So at 5 o'clock, 5:30 in the morning, I'm up. And then I do my meditations. It just sets my mood, my intentions for the day. And the meditation is not a religious thing for me. For me, it's about setting my intention for the day, you know, pumping some positive energy into my office and my space and myself. And then, I analyze the charts. I then go to gym. I have to go to exercise, run, go to the gym, do some cardio and weights. I believe in doing cardio, weights, and stretches. You want to give your body everything that it needs, not just one thing. So, and generally on those days when you do commit and you do follow your routine, you do go to the gym, you'll see that you have great days, even if you get stopped out of a trade. Like, you still feel great. You know, the oxygen in your brain and the serotonin and the endorphins that gets released, like, really plays such a fundamental role in how you tackle each day, specifically from a trading perspective as well, because you do sit a lot when you trade. Stupid little thing, you just sit and stare at your computer the whole time. You have to go out, you have to give yourself a break. I do not trade on weekends. I don't care how crazy the price action gets. It's a rule that I've set for myself, is that I will not trade on weekends, even if I can't resist myself. I have to spend time with my friends and family, and you have to reset your brain, because often when you look at things from a fresh perspective, you see things that you didn't see before. So, and the one thing that really, really sticks with me is that wealth and money means nothing without health. So if I gave you $1 billion, John, if I gave you $1 billion today and I told you you're going to die tomorrow, that's the condition. I give you $1 billion today, but you're going to die tomorrow. Or I give you nothing and you might live. Which one are you going to take?
Live, because you could always make money.
Exactly. Life is more important than money, is to say that you have to look after your health, and by looking after your health actually gives you the mental clarity to be a better trader as well. Look at the charts from a fresh perspective. Your health can seriously run backwards very quickly, especially as a day trader that only does trading for a living, because you sit on your ass the whole day and stare at charts. It's not an active where in an office you're still walking, getting coffee, walking up the stairs, going down the stairs. You know, there's still some activity going on. But I mean, I work from home. I chart. I do trading as a living. That's my income. I chart day in, day out. I pull a salary from the profits that I make every month. And that's why I had to learn the discipline. I cannot just come in on a bull market and hope that I'm going to make a lot of cash that's going to last me for 4 years until the next bull cycle. I have to learn to trade consistently every month in order to pull a salary so that I can pay for my expenses and have a good time. And I'm not an earthly person. I don't like Ferraris and Lamborghinis and things. Although I can buy them, I don't enjoy them. And Yeah, I suppose that
That's a good
answers your
problem to
question.
have, man. I could buy them, but I don't enjoy them. That's where the goal is for me to get to in the next couple months to a year, where I have the option whether I want to buy a Ferrari or not, right? No, but that did answer my question, man. The reason why also I mentioned that is because, like, for me personally, as I mentioned, I started this leverage trading journey myself back in March, and I've been learning a lot. And I was like, yeah, I'm making money, but my health was terrible, man. I freaking gained a lot of weight. I couldn't go to sleep well. Like, I felt so tired all the time. The food I was eating was like trash food. So they say you are what you eat, right? So like that's the reason why I asked that question, that I realized, like, yeah, I agree with you. I think a lot of people take this very lightly, but there's more to it. You have to train as if you're training as an athlete, right? If you're a top athlete, put in that work, waking up early, eating healthy, going to sleep, that's very, very important. And I do agree with you when it comes to all of that. But no, that's definitely some fire right there you just said, because a lot of people don't realize that. It's definitely, I think, also the psychology, like the mental health, like you just sitting in a room is not healthy for you either. Like I'm saying, like for me personally, I don't have to leave my room. I don't have much, like, you know what I mean? I don't have a family going where I have to, get them moving, doing all this,
Mm.
so it's not that big of a deal for me, I guess, maybe because of my age, where I'm just like, I enjoy this so much that I can sit here, learn DeFi and crypto, and I won't get bored. But there has to be a time where you do have to go ahead and spend that time with nature, in my opinion, and go for a walk and get off the charts, because I think this game of not just crypto, but the whole entire financial markets could literally drive you crazy if you don't have some sort of balance, where you kind of call it a line where you're like, I want to trade, as you mentioned, but maybe I should go out for a walk, right? So for me personally, that's actually what I'm doing right now. I after I lost that money with Grok, I don't think it hit me that much till later on. Then I try to revenge trade what I've noticed after I got liquidated once, and then I got wrecked again this month trading some dumb meme tokens. This was just like pure gambling, at this point when I was doing this. I wasn't even trying. I wasn't even leverage trading. I was just gambling meme tokens, and I'm like, you know what? I'm gonna do this myself. I'm gonna go ahead and stop trading for like 3 months. That's my goal right now. I don't care if the market goes up. I'm gonna literally take a break mentally and physically from the market, still look at the markets, but I'm just gonna dollar cost average. Why stress out over all of this right now when I know that the issue that I have for me personally is a discipline? I first have to work on my discipline, right? So like right now, I'm going back to the basics, where I'm like, I'm going back onto, trying to get my psychology back, trying to get my discipline going, because as you mentioned, it's something you have to say enough is enough, right? It's time for me to finally go ahead and call it a day and actually focus on this. And that's where I'm at personally on my journey right now. Is I'm in my journey right now where I'm like, you know what, I know what time frames to trade. I know what hours I like to go ahead and trade. I know what not to trade and what to trade. For sure, not the meme tokens, Chad. By the way, don't leverage trade meme tokens. Freaking dumbest thing you could do. A lot of money you can make, but taking profits. Good luck with that. It's going to be very, very difficult, especially when there isn't enough liquidity. I think higher cap altcoin trading is going to be the move moving forward. Higher cap altcoins and Bitcoin. Doing that and with the discipline, I think that's something that I'm going to be focusing on in the next couple of months. So I'm like literally going back to the basics, man. Like if I like the first day where I wish I would have done, right? Go back to the books, ask myself, what am I doing wrong? What do I need to work on? Obviously, I know my what I'm doing wrong right now is being disciplined. So moving forward in the next 2-3 months, I told my community I'm gonna focus on literally just dollar cost averaging, and then just reminding myself why I need to stay disciplined, right? Because it revolves with everything around your life. I feel like it's just the same thing. Like if you promise yourself you're going to lose some weight, right? What does that require? Discipline. You might be motivated for one day, but are you going to be motivated to, stay under, calories in, calories out? So like right now I'm like what is that called? Resetting my mind, recollaborating my mind, where I'm like resetting my mindset, where I'm like, okay, these are the things I need to look for. And now let me go ahead and focus on my discipline. I think as soon as I get this discipline thing going, man, and my risk management, I think I'm going to be killing it just like you. Probably not as good as you, but close to you, where I'm printing money out of like the Federal Reserve, and I get to decide whether I want to buy a Ferrari today or not. So there's definitely some things on my checklist I got to go ahead and check out. But I just want to share that with the community because I don't think a lot of people understand how important those other factors are. People are just like, just show me how to make money. You know, where do I enter? Where do I exit? But never actually consider the other back end things that really do matter. So that I appreciate for you sharing that, man, by the way.
Thank you. Yeah, and I think the last thing about me is when you watch my YouTube updates, or when you if you're part of our community, I do not give signals. I will teach you how to fish, but I'm not going to give you a fish, because I have received death threats in the past. People want to throw bombs through my window because I gave a signal and the trade didn't work out, and people went in 100x with their entire portfolio, and then they lose everything. And I'm like, and it's almost that mentality of, but devil said so it can't go wrong. No, it can, because generally when people give signals, you create liquidity for market makers to come and grab, and that's why I don't give signals anymore. But then also on the flip side, you've changed my life. I've able to pay off my student loans. Thank you so much. The problem is if I'm not there, and if the person that you're following is not there, how are you going to make money? How are you going to trade? And the first way that you know that you're a successful trader is that you switch social media and YouTube following off for 3 or 6 months in terms of who you follow for trades. The Banter show, Andy's show, the John show, the Devil show, whatever show you used to watch, you switch it off and you see if you can make money without following anyone. Then you know, doesn't matter what happens to you in your life, you'll always have something to make money and have an income so you can have a meal every single day. Yeah, so it's about, I don't give signals. I don't give signals. I will teach you how to fish for yourself.
I think that's the most important thing, man. I'm glad you mentioned that, because I feel like, especially not just in the space of crypto, but I just feel like mostly in the space of even like the financial side, where it comes to either like stocks, options, or forex, if you were to say, the thing is that people are not willing to be accountable for themselves, right? It's like, it's not your fault. Let's say even if you did give a signal, right? It's not your fault if that person was to lose money. But see, the thing is, people are not accountable for their own actions, and I think that's the problem for a lot of traders, that I would say. And I'm talking through experience for me personally, where last bull run I made a lot of money and I pretty much lost everything. Where I lost literally everything, like apartment, car, credit went through the roof, went literally down, because I over leveraged myself. And I was listening to these other influencers that I thought had the best interests, and little did I know they didn't know crap about the market. And I could sit there and blame them, or I could go ahead and be responsible and be like, you know what? I blame myself for not educating myself over this. This is the reason why I tell everybody, I could sit here and give you, technical analysis of my perspective if Bitcoin's going to hit this price action, or Solana this, or is it a good time to buy or sell. But I believe, as what you mentioned, everybody should learn how to use this. So if one day we're not live streaming or we're not here talking, how to navigate in the market, because you're going to remember, oh, D-Will showed me this about the, the LEO wave theory. John told me this about the DXY or the US 100. Now you're putting two and, one and one together, you get two, and now you don't need neither of us, right? And that's what a lot of you should go ahead and take this. The goal is for you to learn independently, and then just use what we're teaching you to go ahead and become a better trader, because you're going to go ahead and get a little bit of everything, right? You might get a bit from me, you might get a bit from D-Will, a bit from Andy, a bit from Banter, and then you're going to go ahead and choose what you like. Like for me personally, I don't watch that many traders. I now, the only people that I add now to my list is you. I watch you, Andy, and maybe this other guy named Sammy Loyal, and that's about it. Maybe like 4 traders that I actually listen to. As far as like hype YouTube channels, I don't listen to any of those, because I know that I don't want to have any influence for me personally on my perspective. I only watch traders that I respect to go ahead and confirm with what I'm saying. And if I hear the people that I trust and that I trust, and I know that I could go ahead and listen to, which is like 4 or 5, only 4 or 5, and they're all traders. I just mentioned them. 4 actual traders, one of them being a fundamentals in the stock market. So 5 YouTubers in a financial sector that I listen to and I watch when it comes to TA, and that's about it. I don't watch anybody, this is the next $20,000, token, all of this. Listen only to 5 traders and that's it. Keep it very, very simple, because for me personally, I don't like to get overly influenced with other traders. I like to do my technical analysis first and then watch these channels, including yourself, and then be like, okay, maybe I missed that. Where can I go? Like, for example, the LEO wave is like, damn, dude, I never knew that. You know what I mean? I've always wanted to learn the LEO wave, but now I kind of know a little bit. So now when I watch your videos, now I'm going to know what to look for. And it's just adding onto like my like, oh, maybe I want to use the LEO wave now, maybe I don't. You have to, and that's what I recommend all of you, is it's cut down to a few traders or YouTubers, whatever you want to call us. I don't know, traders, streamers, same thing, I think. And then stick to what kind of strategy works for me, the best from you. And one thing that I always got from my mentors is that what he would always tell me from business, he'd always tell me, trust but verified, right? Trust that the person that's talking to you, like me, for example, or D-Wolf, are telling you the best thing, the best thing for you not to get wrecked, but verify at the end of the day, meaning go ahead and make your own analysis. Go ahead and do your own research to go ahead and confirm that yourself. So trust that the person you're listening to is giving you the best, news, advice, whatever you want to call it, and then verify your by yourself and actually go into the charts and be like, okay, you know what? I think John or D-Wolf might be incorrect, because I think, they probably drew the line a little too high or a little too low. And that's what I think, in my opinion, makes you a best trader, is by questioning other people's somebody else. That's what I think. I don't know what you have to say to that, but I think that's how you can become better, because you don't want to be putting your blame on anybody, right? You want to be accountable, and that's what I'm saying. You have to be accountable for your own decisions. Whether we could sit here and give you the price action of where something's going to go, but at the end of the day, I think being accountable, it's one of the most important things. You could blame the Federal Reserve, inflation, the markets, Gary Gensler. You could blame everybody, but if you're not questioning yourself with your ability, I think that's where you begin to lose, in my opinion.
Yeah. Some very wise words there, John. I think, I can also hear from how you are talking that you've been through a lot in the trading industry.
Yeah, you've trading, business, everything, man.
Yeah, and I mean, the one thing that I always remind myself about every day is it doesn't matter how knowledgeable you become or how good of a trader you become, is to always stay humble. And I am humbly here on your channel trying to teach everyone what I know. And because as soon as you start to get arrogant and the ego starts to come in, this market has a way to humble you like no other thing on earth. It humbles you by taking money out of your back pocket. And you might, show off on YouTube and say, I've just bought myself a Ferrari and look at this and look at that. And then something blows up in some aspect of your life where people then judge you. And I also see that a lot of people like to follow the YouTubers that live the lifestyle, that have the fancy cars, that take pictures of themselves smoking cigars and all these fancy things. And all good and well if you want to aspire to live a physical life like that. But, it's not something that draws me in, because I am not a physical person. For me, a good healthy meal and time with the family is way more important than buying a Ferrari, for example. I'd rather spend my money on experiences. I like to experience things in life. So, and rather than buying physical things, I will go and do a trip somewhere or experience skydiving or a bungee jump adventure, whatever the case might be. But just be careful who you follow, because a lot of people got lucky. A lot of YouTubers got very lucky because they dollar cost average when the price of Bitcoin was $100, or a friend, they had a ping pong beer drinking competition. It's like, I dare you to buy $1,000 of Bitcoin or Ethereum, whatever the case might be. And then the whole thing, the narrative just blew up. So it's these stupid, dumb people, sorry for the language. Some of the YouTubers I've seen, they've got no technical knowledge. They've got thousands of followers, and then when they give a signal, everyone loses money. And it really irritates and pisses me off beyond belief, is to say that you have not gone through the ropes of trading. You've not learned the lessons. You got lucky. You really got lucky with a couple of trades during a nice little bull market. You have all this reserve cash, and now you're trying to teach people what? What are you teaching them? That I am cool, I have all these things, and I give signals where people lose money. But please use my affiliate link so that I can, at least when you lose money, make some more money.
Yeah. Yep.
Anyways, it's
talking about affiliate links. Talking about affiliate links, chat. Make sure to use the links down below, and also D-Wolt's on his channel, right? It does help support us, but no, I completely agree with you, man. I completely agree with you. I always mention this to my chat as well too, is that people are like, oh, when Lambo, when this. The reality is anybody can make money in this space, man. That's how simple making money in crypto is. It's really, really simple. Anybody can make $100,000 plus, $500,000 to $1 million. I'm sure everybody will be able to do that. The biggest thing that I always tell people is, will you be able to keep that money? Because I think for me personally, also because I've made money so quick in the meme coin sector, you almost don't feel that attachment to the money, where you're like, you only made $50,000. But if you kind of put it in perspective, you're like, damn, dude, $50,000 is actually quite a bit. But when you get the money very quick, there's a higher chance you're going to lose the money a lot quicker. And that's because you never actually went through the cycles of what we're talking about right now, where, if you're actually trading an account slowly from $1,000 to $10,000, it's going to take you a lot longer, in my opinion, leverage trading, depending on the type of the market that you're in, to go ahead and turn that into a couple grand. But, the sooner you hit that jackpot, it could either be a blessing or it could be the worst thing that ever happened to your life. Because I've seen people, especially in the DeFi space, where they invest a couple dollars. Like, let's say, for example, I've tracked a lot of big whales that got into Pepe early on, or like Bonk, and put in only $20-$40 and made over like $500,000 to $1 million, right? But the question is, how many of those actually keep the money at the end of the bull run? Very, very few. Because then they're like, oh, I just made $500,000 to $1 million. Let me throw $1 million into this other meme token, and the chances are they're probably going to lose the money. So it's not about how much money can you make. You're going to be able to make a lot of money. You could either get lucky, getting in at the right time, whatever the case is. You probably have the best setup. You can make a lot of money, but the question is, will you be able to keep most of that money with the right mentality? And I think that's one of the most important things also moving forward when it comes to making money very quickly in this space.
Yeah, most definitely. It's, easy come, easy go. It's that saying. If you've worked hard for something, you tend to protect it more as well. And it's, John, it's just about being consistent and being disciplined. I cannot, unfortunately, I am, let me show everyone here. I am doing a little bit of a wild experiment over here, and some of you might say, oh, shame, that's little money, but I'm testing out an exchange, BingX, and I'm sure, John, you'll slap an affiliate link down for yourself there as well. I'm playing around with this exchange because I want to diversify my risk. So I'm using Bybit, I'm using MEXC, I'm using a little bit of Binance as well, but I want to start using BingX. So I'm playing around. So what I do is I throw $50 in there, and I'm prepared to lose it, no problem at all. And I'm testing out the features. Does the stop loss trigger when it's supposed to trigger? How much are the fees for the stop loss? I want to do a trade where I get purposefully liquidated. I want to get liquidated on one trade so that I can see what happens. What email notifications do I get? What SMSs do I get? So I am playing around with this exchange at the moment, just to see what it's about. I started 3 days ago. I put in $47. So
nice,
up on the account, which I'm happy with. I am being a little bit more. I am being a little bit more risky because I don't care whether I lose the money or not. But because risk management is so built into me, although I am using a lot more leverage and using a lot more capital of the $50, you can see I've entered a trade. I've already protected my position. Yesterday, I entered that Bitcoin trade. I protected my position. So risk management is just built into me. I can't just go crazy and 100x and hope that I do actually lose it. But yeah, small trade, I mean, $2 profit. But in perspective, $2 in a percentage to $47 is a big percentage. And the question is, can you make it consistently every day? And I like to use the 1 to 2 risk to reward ratio, is to say that if your stop loss is always 1% away, never more than 1% away, and you always plan a risk to reward that's 2 to 1. So you will always make 2 times the money that you are risking. So for every $50 that you are risking, you will make $100. If that is your strategy, you can lose 7 trades. And if you win 3 trades, you will only be down 1%. Okay? Work it out. 7 trades, 7%. No? You win 3, 8, 6. So you've lost 1%. So it's not about how many trades you get right. It's about your win to reward, and how, it's to say that, well, even if I get 6 trades wrong every single day, I do 10 trades a day and I get 6 wrong. So that's 6% that you've lost, but you get 4 right. Sorry, 6, 4 right, 2, 4, 6, 8. You've made 1% on your capital. Okay. We all lose trades. Do not look at me and think that I don't get stopped out. I'm most probably going to get stopped out right now. Look at that. I'm going to get stopped out, but guess what? I'm going to lose nothing. Okay. It's about how you manage your risk. And it's about I don't think people understand how important risk management is, because even when I get stopped out, I don't lose money. Yes, there are times where I do lose money when I get stopped out, especially when you enter the trade for the first time. Then you get stopped. The risk is more. But now, if I get stopped out, I don't lose money. I try again. And as long as I can get my R&R 2 to 1, and I can at least win 5 to 6 trades out of 10, I'm a profitable trader.
Okay. Yeah, the people like you, man. We definitely have to do like a weekly collab or something, especially as the bull run continues to pick up, man. I think there's a lot for me that I have to learn as well too. So everybody definitely go ahead and check out his channel. I pinned it on the live stream, and I also will go ahead and pin this his channel onto the, as soon as the pre-recorded is over too, or the live stream's over. You guys will all be able to watch this on the pre-recorded as well. And if you are watching this pre-recorded till this time, we're almost going into 2 hours on this stream. So, a lot of knowledge was spit here. So smash that like button for me, comment down below, check out D-Will's channel. It looks like Will Stopson wants to check out ICP. Do you want to check that out, D-Will? If you could do some TA on ICP. I know he's been waiting for us very, very patiently. We just keep on going on these rants. I apologize. It's mostly me, man. I apologize. I just have a tendency to ask a lot of questions, and sorry about that. But
yeah, so for me, keeping it simple, and it's not about, it's not about technical analysis. Always amazes me, because people break people down that get it wrong, and they build people up that get it right. But the fact is, we all get it right and wrong at some point.
Yeah, I'm glad you mentioned that, man. I get so much stuff when people are so mad at me because I'm bearish and it hits it, but I'm like, I'm not going to tell you I told you so, right? It's just a lesson learned. We're not going to get it right all the time. And that's our goal, not to be right all the time, right? It's to be right as many times as possible as we can, but we know that there's a probability that it could reverse at any time.
Exactly. And like I've explained, just with risk management, if I am right 6 times and I'm wrong 4 times, I'm an extremely profitable trader. I can pay myself a nice, decent salary every month with good risk management and following my rules. And that's what people don't get. Even with my community, I often tell them it's not about me getting the analysis wrong. I mean, the market can do anything, and resistance and supports are made to be broken. That is how you get price action. It's about how you manage your risk. Okay, cool. But for ICP, let's jump into ICP, keeping it extremely simple. John, I've gone through the technical Elliott waves, and I think I've blown people's mind in terms of, oh God, I'll never be able to understand it. But let's keep it simple here. I've got a trend tracking the momentum to the upside. Nice little fake out here. So what you can do is 2 ways to play this trade. Is you wait for the break of trend, or if we lose the support, which is also the trend line, and we start closing candles below. So if this plays out like this, we could still break up. Why? Because you are still being supported by support. And a break our trader, what they will do is, oh, we've lost trend, I short, and then this happens and they get stopped out. Okay.
Yeah.
So you have to keep your horizontals into play as well. The other scenario is if we come down and we start closing candles below the support and consolidate, you could expect momentum to the downside. Then let me just take the brushes out the way. The other scenario is you want to buy, I call this the home line. This is your home line. This is where the price comes home to after it's pumped up. Okay. It pumped, we came back home. It pumped, we came back home. So these are your best buying opportunities. And the reason I like these buying opportunities is because this is where you can manage your risk the best. Because if you buy here, you know where to put your stop loss. Okay, cool. So from this little move up, I can now see, okay, taking a fib, we have support, we have a 618, we have a 50%. So potentially this is a great buying area for continuation to the upside. Okay. And then profit taking, always to keep profit taking simple is you want to look at the pivots to the left. So there's a profit taking area and there's a profit taking area. So what you can do starting out as a trader and you're not too sure is TP1, TP2. You take 60% profit here and you take the rest over there. And if price doesn't come there, at least you've taken profit, and you also, you know, when you enter the trade, move your stop loss up to break even so that you, if you do get stopped out, you don't lose capital. So that's the easiest analysis from my side, keeping it simple, and I'm sure everyone can do this.
Nice. Darkness Star is asking for Sol. I think we just did some Sol TA. We'll probably end it with some Sol TA, but my question is real quick, right? So when it comes to trading, obviously we would all love to, you know, make money, right? But I'm assuming your mentality when you go in, you probably don't go with the mentality of making money. I could be wrong. Maybe your mentality might be percentages. I hear that from different traders. That some of them, like, my goal is to make, you know, 5% a day or stuff like that, and don't really focus too much on the value of the money. And I've noticed most of these traders are usually consistent because they don't focus on, like, oh, I'm going to make $2,000 today, or I have to make $2,000 today. What is your mentality when you're going into a trade? Are you focusing on the dollar value? Or are you focusing on the percentage, or are you just focusing on a trade setup with execution? Like, I just need to execute 5 trades and that's it.
So for me, it's, if you have a money goal, you're going to see your ass. And sorry for my language. I do swear in my YouTube videos as well. If you have money goals to say that, okay, so maybe you want to be a full-time trader, you leave your 9 to 5 or whatever job, and you say, okay, I want to, sorry, I lost my train of thought for some reason.
we were talking about percentages. Like, what's the mentality you go into when it comes to
yes, the percentages. It's if you have to pay yourself $2,000 a month, and you say, okay, every day I need to make X amount, you are going to burn yourself out, because you are going to be on the edge the whole time thinking about, oh crap, it's 2 days left until payday or month end when my debit orders and I need to start paying my bills and stuff, and I've only reached half of my target, for example. Then you start revenge trading, whatever the case might be. So the one thing that I like to focus on is risk to reward. That is my biggest focus, is to say that R&R, and you'll hear a lot of professional traders and experienced traders talk about your risk to reward. How much are you risking for how much are you losing? For example, so let's do an R&R here quickly. Okay, let me just take this out the way, take the scribble out, just clean this up. So risk to reward for me has to be minimum 2 to 1. Every trade that I take, the more the better. Okay, is to say that, well, if I have, let's just for shits and giggles say, I have to put my stop loss below this low over here. Okay, do this. And the first TP point is over here. This is where I want to take profit. This trade does not make sense to me. I will not take this trade. Simple.
Neither. I wouldn't take that trade either.
Why won't I take this trade? Because the R&R is 0.77. So it needs to be at least 2, which is over. Oh, let's go. Yeah. Okay. I have to be able to get the price action to come here for me to make profit and to make the money that I'm risking with the money that I'm potentially making. And I think this is what a lot of traders get wrong as well, is that based on the analysis that I've just given, they will come and enter the trade, put their stop loss here below, and then the trade goes against them. And another trade, the trade goes against them. And the trade goes against them. So your R&R says you are risking more than what you are gaining. So if you had to do 10 of these trades and you lose 5 and you win 5, you will be in a negative because you're not even 1-to-1. I hope this makes sense, is that you have to at least have a 1-to-2 ratio in order to be a successful trader. This is the minimum trade you want to take as a trader. If your risk to reward is not this, do not take the trade, period. Don't take it. As an experienced trader, you will know not to take this trade because the risk, the money that I'm risking doesn't make sense.
Yeah, 100%. I tell that to my community as well too, that there's sometimes some like, for example, like at the time when Solana was like over $100 and something, I told my community, I was like, it just, the risk is just doesn't make any sense. Like I wouldn't even risk, longing at these highs because, the probabilities of them going of Solana, dumping down, the chances were higher. So it's like you're at a point where like the risk is way too high. And some people also do that with like, I also even had some people asking me like, oh, I'm probably going to sell my Ethereum for Solana. And I'm like, dude, you don't want to do that when we reach some sort of top, right? And that's what I always tell people, not at this point, but I always tell my community, risk to reward is something you always have to ask yourself. Like, what is the probability that this token could do a 20 or 30% pump? And what are the probabilities of them going down, right? And that's what a lot of people, I agree with you, literally completely forget. They're like, oh, like for example, that's what probably everybody's mentality was with the Bitcoin ETF. They're probably like, oh, Bitcoin ETF, $100,000. But were they really thinking of, the 618, the Elliott wave theory? And then when you start adding all of those together, the DXY, the US 100, when you start adding all of those together, you're like, oh, snap, dude, like the reward is not as high if you were to long at these levels right now. If it does pump, you're going to be rewarded really well. But if not, it's going to go the opposite way. So that's what I always tell people too in my community is always ask yourself, is it worth putting my money into what I'm doing right now for a small reward? People don't, I can't believe people actually don't really see that. It's something very simple, but it's something that I guess like, I'm not sure if it's human psychology or something, or maybe we're like way too emotional at that point where we kind of don't sit and think about it. But yeah, man, that's very, very important.
Yeah, so for me, and that's why it's so important. Everyone says you need to be patient as a trader. This is where I'm patient, is to say, okay, I've identified a potential trade. I want to take this trade, but I want it to make sense and be worth it. I want that to at least 2-to-1 reward. So I will then patiently wait to see what's going to happen over here. So what if the price had to do this, it bounces and it does this? I will then say, okay, when it gets here and my alarm, you can go and put your bloody alarm on here. People don't sometimes realize how important these alarms are, because then I can go and do whatever I want during the day. I wait for the alarm to go off and then I can make a decision whether to take the trade or not.
Does that alarm connect to your phone?
It can send you an SMS. It can send you an email. It can make, in my case, it makes loud noises over my speakers, and I get a SMS over my phone. So now I'm planning the trade to say that if this scenario plays out, I will take the trade, because what happens now, I can put my stop loss below that low over there. You see, I can now move the whole trade. So I'm entering over there. I'm entering over here. I'm putting my stop loss over here. And I'm targeting the highs, for example. Now I've got a 5-to-3 risk to reward. Do you see how important it is not to FOMO into trades? Because if you're patient, then you know where to put your risk management. So if I now get stopped out, I'm like, fine, it's okay. The next one you win it, then I've already made my stop loss plus 4 times more money. Okay, so that's why it's so important to be patient for the trade. But because what can now also happen is, if you enter where we are right now at this current price action, you have to put your stop loss here. And you're targeting the high. Okay, the risk to reward doesn't make sense to me, and then the price action does this.
Yeah, and the chances that you might get lucky, you could get lucky and it does have a breakout, and you might
Yeah.
succeed, but then on the next trade you might not. And that's where I think also the discipline comes in, because I'm sure there's been plenty of times where we think maybe, there might be some sort of pattern for the people that don't wait for breakouts, like they're fake outs, like for example, like a cup and handle pattern forming, and we don't actually see that confirmation yet. We're like, oh dude, like this thing's gonna, like, if I enter in right now, it might be a 30, 40, 50% pump. You might get lucky, but the second time you might not. And the second time is when you actually probably wreck your whole entire account because you didn't wait for confirmation. So I definitely agree with you on that. Confirmation is definitely key. It's something I have to add to my checklist on that, because I've noticed that there's been times where I've gotten lucky on breakouts, and there has been times where the breakouts were fake outs. And that's really where you get wrecked, with fake outs
Yes,
and with
yes.
liquidity grabs. That's where you lose all your freaking capital. And when you start questioning yourself as a trader, am I really good? No, you're good, just that there's other people looking at the same thing as you are. There's probably a lot of people looking, oh, maybe this is a cup and handle pattern, it's a bull flag pattern, so they know that they're purposely probably going to wreck retail, thinking that this is a cup and handle pattern forming or a bull flag, and they're going to go ahead and do the opposite. It's freaking crazy, Chad.
Exactly.
It's a lot of psychology, a lot too. It's like they literally play games. It's like they're playing games with mostly retail, knowing that they probably, learn from a book, of patterns. Probably some influencer talked about how a bull flag pattern is like the most bullish thing, and now they see one and they go all in and they get wrecked, and they're like, oh man, this thing's rigged. It's like, it could be rigged, but there's a lot of manipulation, and that's why confirmation is very, very important, right? Do you want?
Yeah, no, most definitely. And I mean, I've seen this play out 1,000 times, because the first thing that people learn to trade with are patterns. So this looks like a nice little triangle, or, flag, whatever you want to call it. And then what happens is the retail people, they know, they're watching you, they're checking the liquidity. And I mean, it's a game of liquidity. Price gravitates towards liquidity. So all the retailers, and this is now what happens during the bull market, all the retailers are waiting for the breakout. So they play the breakout. As soon as this happens, they enter and they put their stop loss over here. Okay, that's what they taught. And then this happens, and they're like, yay, woo, winning the trade. They don't move their stop loss. And then what happens is the price does this. Okay, beautiful retest of support and a retest of this trend line. Okay, they get stopped out. Ah, shit. Now what happened? A professional trader will look at this as a beautiful retest. I'm still within support. I bounced on the 0.618, whatever the case might be. Now I'm adding to my position, and off to the races we go. Okay. It's just, you learn these tricks and games, and especially when there's lots of retail investors, like with the next bull market everyone is expecting, when a lot of retail comes into the market, I see the retests play out a lot often. So it's one of two things: either this plays out or this plays out. It just does this. It just leaves everyone behind. It goes so quickly that people FOMO into the trade. They FOMO, oh shit, it's going up, it's going up, it's going up. And then it does this. That V shape that we've seen on Bitcoin.
Oh my gosh, man.
See this? Up, down? Exactly.
That's crazy. we laugh at it because we know we've probably done something like that in the past, right? Where we're like, oh yeah, and then we get wrecked. And that's what I tell people. Like, there's two ways when it comes to learning these markets, right? You learn through experience and pain, or you get wrecked so many times. Or the second one is you learn from other people's pain, right? You learn from other people telling you what they've gone through. So I'm assuming, and I'm sure that D-Will has gone through in his past, before he became as successful as he is now, where he was also looking at these pattern sticks and these pattern charts that, a lot of these books tell you, and they're like, oh, bull flag pattern, and they make it seem like it's so easy, where you just spot this pattern and you successfully make all this money. But in reality, it's quite the opposite, right? There's fake outs, there's traps, there's liquidity grabs. There's a lot more to it that most of these books really don't talk about them, especially they're just like chart books, and they're just showing you charts. Some of them are not going to go ahead and tell you specifically, watch out for liquidity grabs. and they'll just say, just wait for this breakout and buy in, and everybody's doing the same exact thing. And that's why it's kind of funny. We're not laughing at you guys. We're laughing at the fact that, you know, we've been there, done that. We've done those mistakes, and it's as crazy as it is, it's just like people fall for it all the time over and over and over again. It literally repeated cycle. That's why these really good traders are able, like D-Wall. Like, I'm sure D-Wall probably made a lot of money on us. You know, he's like he was probably watching our live stream and thinking, what is John's community trading today? Let's do the opposite of what they're doing. Liquidity grabs, man. That's what the good traders do, man. That's what the good traders are doing. You know, they're looking at what retail's doing, the way they're reacting, and then you know, riding the wave or going against it. And that's how they're able to make money consistently, because they're able to go ahead and look at these patterns without being too emotional about, oh, ETF, Bitcoin halving. They're not looking at that. Do you put that into consideration, man? I'm sure you put that into some consideration, but when you're trading, I'm pretty almost positive you don't care about an ETF or not, because you're making money regardless, ETF or not, right?
Yeah, you do get fundamental traders. They basically trade the news. That's all they do. They look for news, for trends, but yeah, it's not my forte. It takes a lot of research time, and it's not something that I enjoy. But for me, I try and stay out of the market when I know there are big news events. You can see I've got these little flags here down at my chart. Mm-hmm. So whenever there's big news events, they pop up here, and I try and stay out of the charts, or I tighten my stop losses because it creates volatility. So yeah, I don't trade the news at all. Yeah. When there's, you know, when the minutes comes out for the or, you know, they're going to raise the interest rates or whatever the case might be, I go on holiday, I walk in the park, I go buy a hot dog and treat myself to some junk food, or you know, or go sit in the gym, in the steam room, whatever. I stay out of the markets during those days, because that's where FOMO kicks in, and you know, the energy and the
you see quick reversals and liquidity grabs during those times too. The fastest times you see the market move very, very quickly is during those times.
Exactly. Yeah.
Let's see if there's any other questions we have. We're about almost like 2 hours and 15 minutes. I think we're about to cut it, or else we'll be here for another 4 hours.
Yes.
But I really enjoyed today's lessons, man. We definitely have to do this more often. Seems like the community definitely loved and learned a lot from me today. Everybody, make sure to go ahead and support D-Walt's channel. We definitely are going to be collaborating more often. I'll go ahead and talk to him off camera, but we'll probably try to do something, and we could do something consistently, like once a week. I think that'd be really cool. Not only do I get to learn, but I think all of you get to learn. All of you are always asking me questions, and I think it's good to go ahead and see different sides of traders. Right? We have a lot of special guests in our channel. But I think D-Wall has definitely been the one that has impressed me by a lot. No offense to anybody that had as guests in the channel, by the way, no offense, but D-Wall has definitely freaking has really got me like mind blown when it comes to all of this. And I'm sure a lot of you probably learned something new today. So I know all of you definitely enjoy his content. Make sure to go ahead and check out his channel. I posted the link down below on this live stream. Make sure to smash that like button for me. Completely free. I also want to go ahead and mention, chat, make sure to go ahead and join my Discord, the Decentralized Titans, completely free. I do some technical analysis there with Bitcoin, and I do go ahead and share some alpha when it comes to the higher cap altcoins. And some meme tokens the community shares. That's the link there. Completely free for now. Won't be free for long. But you're seeing the changes that we're coming in with the channel. The goal is to provide as much value, provide people such as D-Wall. Smash that like button for me. He has really good content, so check him out. And yeah, that's pretty much it on my end. I'm excited for what the market's going to bring us together in the next couple. Well, at least for me, it's already Friday for me. Never mind, it's already midnight for me. But what do you think about the market, man, in the next couple hours, at least for you? Just quick analysis before we end this for the people that are still watching on Bitcoin. Do you see a movement? Do you believe we're going to see some movement to the upside or to the downside?
So for now, I do see us consolidating a little bit more. I'm hoping for a little bit more of consolidation. We are moving down, but when I look at CVD is also tanking down. Considering this pivot, you can see we're making lower lows on CVD. Price is moving down. So it feels like even with price moving down, even during the duration of today, we are building a little bit of bullish CVD that could give us that final push to the upside. So, I mean, only time will tell, but we have lost this daily level. We have support over here. So I'll be interested to see what happens if we do come down here, find support, but perhaps, or SFP from this daily level for acceptance back above to potentially come and claim this high. And then what I would like to see for this scenario to play out is to say, just take this out. I want to then see bullish CVD between these two pivots, this pivot and a potential new pivot that we're going to make over here. So when I go into CVD, I zoom into the 15-minute. Okay, just keeping it basic, keeping it simple. The market is here to surprise us. We just have to keep that in mind. But when you look at CVD, oof, wow, look at this. This is actually saying, look at this pivot, okay, on blue, and look at where blue is at the moment. So that tells me massive absorption of shorts at the moment. So a short squeeze definitely incoming. So
nice.
long limit orders are absorbing. I would like to see yellow come down a little bit further as well, because when yellow and blue is telling me the same thing, it's almost like double confirmation. Yellow is still a little bit high for me, and I think perhaps a little bit a drop. So if you take a fib from this bottom to the top, perhaps that 618, 786 area is a nice bouncing spot for us to potentially go and claim the high again.
That's crazy. I do see that now that you mention it. By the way, if you don't mind me asking, I did see that you have like a liquidation heat map. Can you show us a little bit of that? Maybe we could save that for the next live stream, so we could go ahead and have everybody excited for the next collaboration. But man, this is cool. Can you just walk us through maybe like 2 little details that way, so we can go ahead and get everybody excited for the next live stream on this? Because this looks like some really good things I want to know how to use.
So liquidation heat map is basically, and I can read it for you. In short, it predicts the price levels at which large-scale liquidation events may occur. So, for example, if you look at this, it says 1 billion, 1.09 billion. That is how much money is lying in this area, because people put in 100x trade, for example, and if price hits this area, they get liquidated.
Wow.
Liquidated. Okay, or a stop loss that will liquidate them. Or they've entered maybe a trade down here at the bottom wanting to short, and if the price moves up, this is their liquidation level.
That's crazy.
The price moves towards liquidity. That's why I always say price moves towards liquidity. So when an influencer on YouTube tells 10,000 people to enter a trade, what happens? It creates liquidity and price gravitates towards it. Okay.
Wow.
So in a nutshell, that is how it works. I can do it on Bitcoin. I can search for any coin. Most probably some of the meme coins and the very low cap coins won't be here, but your layer ones and Rune and Solana, they are all here.
So you can have it with different exchanges too?
Yes, with different exchanges, or you can do a combination of all exchanges together.
Wow, man, you gotta definitely share that with me. That's pretty cool. Do you have to pay for that? Is that what is that, CoinGlass?
No, it's free. So you go to coinglass.com, pro features liquidations. It's free, so anyone can use this.
That's really cool. That's really cool. We definitely have to do a second collaboration where you go more in depth with all of this. This looks really, really cool. I see they also have like the Bitcoin dominance and the CME, and that's really cool. The open interest and all that. It's something I've always wanted to learn how to use myself. So I think we can definitely save that for our next collaboration. But is there anything else you want to go ahead and say to the community, where they can find you? Any last advice or last words before we end it? It's not going to be the last forever. We're going to go ahead and do a collaboration probably the next coming days. But anything else you got to say?
Well, thanks for listening. It's been over 2 hours, so thanks for listening to me and John, just battling it out here, sharing our experiences. Thanks for the love and the support. Please go and like John's video, and if you can share the video with family members and friends to subscribe. I think John will be giving you a lot more alpha going forward. We both work for the same team. We are super excited for what lies ahead. And trade safe, practice good risk management. Don't FOMO into trades. Follow us for more information. And that's it from my side today.
Yeah, make sure to like, comment, and subscribe. It's completely free, doesn't cost you anything. And I'll catch all of you guys on to the next live stream. You guys take care.